24/7. So how are you all? And as you can see on the background that the thumbnail is saying 50 questions, 50 minutes we are going to do today. So this is a session for your Indian economy, Indian financial system, in which 50 minutes we are going to discuss 50 questions that is related to your IE, IFS, all the modules, all the A, B and C, D modules, plus the 45 units. So each and every unit I have covered here in form of MCQ, and that's what we are going to discuss in today's session. So let's start the session before wasting your time. So but before that, I am your mentor Amanjot Kaur for Indian economy, Indian financial system as well as PPB. This session will be kind of a session in which we are going to discuss the questions in the form of rapid fire with a little bit explanation. If you want to have a proper explanation in the topic, then you have to join Monday to Friday sessions at the 7:30 AM only on Offices Adda 24/7. Okay, so let's just start the session. In the end of the session, I'm going to ask you how many answers you have given correct out of the 50 questions. So do make sure you're counting your numbers, and if you're watching a recorded session, do let me know in the comment section after completing the video recording that how many answers you have given correct. So let's just start with the first question that is talking about here devaluation of a currency means. One second. It is talking about that the devaluation of a currency means. Right, so the question is asking devaluation of a currency means what? The first we have reduction in the value of a currency vice a major international traded currency. Second is permitting the currency to seek its worth in the international market, fixing the value of the currency in conjunction with the movement in the value of a basket of predetermined currency. And the fourth one is saying fixing the value of currency in mutilated consultation with the IMF, World Bank and the major trading partners. So if I talk about what is devaluation? So there are four terms: appreciation, depreciation, devaluation, revaluation. These are the four terms that is related to the currency's value of your countries in comparison to other currencies. If I talk about depreciation and appreciation, these two depends on the market forces. It means demand and supply of your currency. If your country's currency demand is high in the international market and supply is low, it means your currency value will increase. That's the appreciation of a currency. And in case in the international market your currency demand is low and the supply is more, it means your currency value will decrease. That is known as depreciation of currency. But in the devaluation and revaluation, the Central Monetary Authority of the country, that is RBI for us, it will reduce or increase the value of its own currency in comparison to other currencies. Like when RBI reduces the value of its own currency in comparison to other currencies, that is known as devaluation of a currency. Okay, that is what? That's a devaluation of a currency. And if RBI increases the value of its home currency in comparison to other currencies, that is known as a revaluation of a currency. So here the right option will be A option. Let's talk about that. One second. It is talking about that reduction in the value of home currency or the value of your own currency comparatively to the international traded currencies. So this is known as devaluation. This is done by RBI to increase its exports. If you reduce the value of your home currency, it will make your products cheaper for the foreign countries and they will demand more goods and services from you. And when they demand more goods and services with you, then you will be able to export more goods. Your foreign currency reserve will increase. And RBI has done this at the time of balance of payment crisis, because we needed to earn foreign currency, and the way to earn foreign currency, you can reduce the value of your home currency so that your exports will increase. So the right answer will be A option. Now second question is talking about the cooperative credit societies have a first 2-tier structure, 3-tier structure, 4-tier structure or a 5-tier structure. So cooperative credit societies have 3-tier structures: central level, state level and the village level. Okay, there are the 3 structure in the cooperative credit societies. Now the next question is talking about deficit financing means the government borrows money from the dash. Okay, deficit financing means government borrows money from the dash. From whom? We have these 4 options: RBI, local bodies, big businessman or IMF. So if I talk about deficit financing, first of all, RBI gives loan to the government of India. That's correct. IMF also gives loan to the government of India. But now if we talk about to plan financing, in the country to plan financing, we have these 3 options. First is domestic budgetary sources. Second, we have foreign assistance. Third, we have what? We have a deficit financing. So the first or most way by which we plan the financing, that is the domestic budgetary source. second we have a deficit financing, and third we have a foreign assistance. So this is the sequence by which you plan financing for the country. So deficit financing comes at the second position out of these three sources, and under the deficit financing, RBI will print new currency on the order of Government of India to make sure that the mismatch in the expenditure and revenue of Government of India will be not there anymore. Okay, that's why RBI will print the new currencies. So right answer will be your simply deficit financing done by RBI. Next question we have, during the time of direct British control from 1858 to 1947, the colonial government's official transfer of monies to the UK were referred as dash. So we know at the time of British era, when Britishers used to be there in the country, so they have exploited our raw material, they have exploited our labors. They used to take a huge amount of money from India to abroad. It means India to Britain. And because of that, Dadabhai Naoroji has defined the drain wealth theory also. Drain wealth theory means when the money of your country, the wealth of your country was drained by the Britishers, taken to the Britain. Okay, so they used to take money from India to UK in the form of salaries and all, and that was named as home charges. That was named as what? Home charges. So the right answer will be C option. Okay, next question. Contribution of which sector is the second highest in the Indian economy? So we have discussed that there are three sectors: primary, secondary and tertiary sector. So primary, secondary and tertiary sector, the contribution of the sectors will be different. Okay, so if we talk about here, we have three sectors and the fourth one is none of the above. So if you talk about in context to income, in context to the contribution to the income, in context to the growth, economic growth of the country, the maximum contribution will be done by tertiary sector, secondary sector and the primary sector. But in case of employment generation, the maximum contribution will be done by primary sector. So primary sector gives the maximum employment to the country, then the secondary and then the tertiary. So here the right answer, second highest of the Indian economy contribution done by the secondary sector. So right option will be B, because first will be tertiary sector. Okay, now this is the percentage. You can see agriculture only contributes 18%, industry contribute 28% and services contribute 53%. Clear? Next question. Guarantee to an exporter that the importer of his goods will pay immediately for the goods ordered by him is known as dash. So we know that exporter means the person who is selling goods abroad. Importer means person who is purchasing goods from abroad. So if I am an exporter, I am sending my goods to the importer. What guarantee if there will be for me that the importer will definitely make a payment to me? Is it letter of credit, laissez-faire, inflation, or none of the above? So inflation is not a document which gives you the guarantee. Inflation is the situation in the economy in which the prices of goods and services are keep rising. That is known as inflation. So it can't be inflation. Use the elimination method. If you use elimination method in the paper, now that will be very easy for you because the confusion will not be there in the option. So it can't be C. Laissez-faire means freedom. When you are dependent on the market forces, demand and supply of goods and services, that's the laissez-faire, like freedom you have. So it can't be the right answer. The right answer is letter of credit. Letter of credit is the mode of payment, or I can say secure mode of payment that will be used in the international trade. So if you have the letter of credit, then you have a guarantee the importer will pay money for the goods and services you send to him. Okay, so right answer is A. Next question. As per the World Bank classification, Indian economy is a dash economy. So I have told you that World Bank has defined the 4 categories on the basis of the per capita income. Now, what is World Bank? World Bank is an international organization which have its own group. World Bank group is there. And World Bank helps the member country to reduce poverty, to have the development and reconstruction of the country. And the 5 institutions are there, that is IBRD, also known as lending arm, IDA, also known as soft loan window of World Bank, IFC, then MIGA, MIGA, and then we have ICSID. And so many times I have told you that out of these 5 institutions, India is a founding member of which particular institution, and India is a member of which particular institution. Clear? So that's what we're talking about here in case of your World Bank group. So these are the 5 institutions in the World Bank group. And as per World Bank, per capita income definition has been given, clarity categories has been given, and India comes under the lower middle income category because India have a certain per capita income in the country which comes under the lower middle income categories. Clear? So India has a per capita income of $1,891. That's why India comes under the lower middle income country. Okay, so do remember there are 4 categories. World Bank have 5 institutions and India comes under the lower middle income category. And this category given by World Bank on the basis of the per capita income. Per capita income means the per person income. Okay, now which of the following is not applicable for a worker who works in the organized sector? So out of these options which I am going to show you, which of the following is not for a organized sector's worker? So first of all, what is organized sector? Organized sector worker means those workers whose terms and conditions is predefined. Do read the option. I will explain you what is organized sector means. Organized sector means a sector in which your job's terms and condition is predefined. Okay. Apart from that, they have defined you a certain monthly income will be given to you. You will have these paid leaves, you have a this top job terms and condition. After a certain year, you have a minimum incremental policy. Like after 1 year, you will get a minimum increment. That's a guarantee. If you want to leave the company or company fires you, you have to give the notice period. So these are the things that has been defined here in the organized sector. Okay. So these are the things what is defined under the organized sector. Now, if I talk about in the options, which of the following is not applicable to the workers who are from the organized sector? It will be your not paid for leave. Organized workers will always be paid for the leave. A certain paid leave will be there in a one financial year. Okay, all the other are there, but this is not applicable on the organized worker. This is applicable on the unorganized worker because these are the like agricultural laborers, domestic help of your street vendors. They do not have their job terms and conditions defined. They do not have a particular period defined in which definitely they will get the increment and all. So right answer will be B option. Okay, so do remember organized and unorganized sector workers, what are they? Next, in which type of economy do consumers and producers make their choices based on the market forces of demand and supply? So in which type of economy the consumer producers, they make their choices that will be based on the market forces. So do remember, I have just told you market forces are means demand and supply. Whether you are talking about international market, whether you are talking about national market, always the market forces are the demand and supply of your country. Okay, so in which particular economy you think the producer and consumers decides what to produce, how to produce and for whom to produce on the basis of the market forces? So it will be capitalistic economy. And the right answer is market economy. Market economy is also known as capitalistic economy. Market economy is also known as what? It is also known as your laissez-faire economy. The economy which depends on the market forces. It will be run by the private industrialists. So the right answer will be D. Okay. Now do remember the other names of the economic system also because they will be asked. Hana, because they will be asked. So do make sure you remember the other names of all the economic system. Okay. So now next question we have that is asking about which of the following statement is correct in relation to the topic in which. So you have to tell the correct statement. Now this statement or this question is a little bit lengthy, but it's very obvious. You do not have to worry about it because being a question lengthy does not gives you the thing that this will definitely be a very tough question. Don't have this mentality in your mind. Just read the option. So we are talking about the infrastructure. So the first option is saying, according to the recent report of Ministry of Finance, India need to spend $4.5 trillion on infrastructure by the year 2040 to improve the economic growth and community well-being. So economic development, I have told you so many times, economic development means economic growth plus economic welfare. So economic growth is there, community well-being means economic welfare. So if we talk about country, in our country, people are doing migration, the migration is happening from rural to urban area. People are coming to urban areas, to metro cities to find better livelihood, to find a better living conditions. But if we talk about the metro cities, they have more population and less resources for the population. If you go to the metro cities, you will find the flats or you will find a certain place to live, but that will be very small and very costly because they do not have, they have the infrastructure in such a case about the population which used to be from the metro cities. But those population who are coming because of the migration, they do not have services for them. So it is very important for the government to spend on the infrastructure. And as per the latest report, it has said that $4.5 trillion have to be spent on the infrastructure sector so that you will be able to fulfill the infrastructure need of the population. So first one is correct. Second, a special emphasis on structural reforms and foundation establishes the way for investment in the diverse sector. This is also true. You have to focus, you have to give a special focus on this structural and foundation establishments. Third, every country needs a defined infrastructure that can provide adequate facility for each individual and which paves the way for the capital mobilization. So, every country have to define that infrastructure will provide the facility to each and every individual which is required to have a proper livelihood. This is also true. Now, an initiative that has called the National Infrastructure Pipeline was launched by the government for this particular investment only. So, all are the statements which are correct about this. So, right answer will be A, 1, 2, 3 and 4. All the statements are correct. So, you can see this is not a very tough question. They have just given you the investment related to the infrastructure sector statement that has been given by the government or the situation that has been given all in the book already. You will find all these statements in the book. From the book, I have made this particular question. So, all the statements are there. But what is required? You need an in-depth study. If you are not doing an in-depth study, that will create a very bad issue for you, because then in the such kind of question, that is a statement-based question, you won't be able to answer all the questions. You will be finding a doubt in, let's say, for example, in a certain questions because you have not completed that. So do make sure a conceptual study and the detailed study you are doing regularly. Okay. Now the next question. Next question we have that is talking about read the following statement carefully and choose the correct option in relation to the topic primary dealership business. So primary dealership business was actually introduced by Reserve Bank of India, in which RBI said that they will help, the primary dealers will help the RBI in the selling and purchasing of government security. So we know RBI works as an agent of Government of India, and that's the responsibility of RBI, one of the responsibility of RBI to sell and purchase the government security to the public, to the banks and to the industries. So now first our statement is saying for undertaking the primary dealers business through a subsidiary, a bank should be registered as a NBFC with the Reserve Bank of India. Okay, like if you want to perform the primary dealer business, then you have to be registered as an NBFC with the RBI. Second is saying for undertaking the primary dealer business, departmentally in the bank is required to be registered with under Banking Regulation Act 1949 for the same. No. Why would you register under the Banking Regulation Act? You have to register with the RBI. Even the non-banking financial companies, these are the non-banking financial institutions. They are incorporated under the Companies Act, but they have to be registered with the RBI if they want to perform any financial activity in the country. So they have to be registered with whom? With RBI as a NBFC. So the right answer is first statement is correct, but the second is incorrect. So right option will be A option. Okay, your right option is what? A option. Next question. It is talking about. Next question is talking about Atal Pension Yojana. So you have heard about Atal Pension Yojana, or everyone have heard about the Atal Pension Yojana. Actually, the Atal Pension Yojana was launched by Mr. Narendra Modi in 2015 from Kolkata. So the question is asking fill in the blanks in the relation to the scheme of Atal Pension Yojana. So what is Atal Pension Yojana? Introduced in 2015 by Mr. Modi from Kolkata. Okay, now let's see. There are three fill-ups. There are three fill in the blanks and you have to answer accordingly. So Atal Pension Yojana is a pension scheme launched by the Government of India, which is focused on dash sectors worker. Which sectors worker can have this particular scheme? The organized or unorganized one. So right answer is unorganized. So B and D cannot be the right answer. This is the elimination method we have used. B and D cannot be the right because its scheme was introduced by the unorganized worker. Now, under the Atal Pension Yojana, dash guaranteed pension of 1, 2, 3, 4, 5. It is a minimum 1000 pension or maximum 1000 pension. It's very obvious, minimum 1000. So A cannot be the right answer. So C will be the right answer. Unorganized sector worker, minimum pension of 1000, and it will be available after attaining the age of 60 years. So the right answer will be C option. So Atal Pension Yojana, person can enroll between the age group of 18 to 40 years. If you belong to this age group, you can enroll yourself, and after attaining the age of 60 years, you will get the monthly pension, minimum 1, maximum 5000. Okay, this is the Atal Pension Yojana. So right answer will be C option. Now, which of the following are included in the motor insurance policy? So what kind of uncertainty, what kind of risk will be covered under the motor insurance policy? You have to answer, and these are the options in front of you. So out of these 6 statements or 6 conditions, which of the following are included in the motor insurance policy? So first is saying fire, explosion, self-ignition, lightning. Second is saying burglary, housebreaking, theft. Third is saying riots. Fourth is saying under influence of intoxicating liquor and drugs. Accident taking place beyond geographical limits. While vehicle is used for unlawful purposes. So these are the conditions they have given you. Out of these, you have to tell which will be included. So if you are using a motor vehicle for unlawful activities, the insurance company will give you the insurance? Obviously not. If accident take place beyond the geographical limits, it will not be given you the insurance. If you were riding the motor insurance, if you are driving or riding the motor with the intoxication, liquor and drugs, it will not provide you the insurance policy. But in case of fire, explosion, housebreaking, theft, riots, all these will be covered. So the first, second, third is the situation in which you will get the insurance under the motor insurance policy, but not in the 4th, 5th and 6th condition. They are not applied in the motor insurance policies. So the right answer will be your B option. Okay. Now, next question is talking about the CRAs which have been approved by SEBI include. Now, SEBI is what? Securities and Exchange Board of India. Securities what? Securities and Exchange Board of India is the SEBI. That's a regulatory body for the investment market. It's a regulatory body for which market? Investment market. So, credit rating agencies, if we are talking about, credit rating agencies are the agencies which provide rating to the companies, to the banks, to the individual, to the corporates also on the basis of their credit history. And all the credit rating agencies are regulated by SEBI only. So out of these, question is asking which of the following is included or approved by the SEBI. CRISIL, India Ratings, okay, then ICRA, CARE or Brickwork. Out of these 5, which of the following is included? So do remember, credit rating agencies are the agency which provide rating to the individual persons, to the companies, to the corporate, etc. Okay, so the right answer here will be all. All are the part of your credit rating agencies which has been approved by the SEBI. SEBI is the regulatory body for the investment market. All the credit rating agencies will be regulated by SEBI, and all these are approved by the SEBI. Okay, and the credit rating agencies have a FDI limit of 100%. If a foreign company wants to come to India, invest in the credit rating agency, they can do it by themselves. They do not have to partner with the Indian company. If they want, they can do, but that's not mandatory for them. Now, what is the maximum balance that a payment bank can maintain in each account? So first of all, payment bank was introduced, or RBI started giving license to the payment bank from the year 2015. On the recommendation of Nachiket, more committee payment banks were introduced. These were introduced for the purpose of financial inclusion. What is financial inclusion? To link each and every person with the financial product and services at an affordable cost. Okay, so that they will be able to get the benefit of the financial product and services. Now, earlier when the payment bank was introduced, they were allowed to accept only 1 lakh deposit per account holder, but now it has been increased by RBI to 2 lakhs. So in 2015, they used to accept only 1 lakh per customer. Now they can have the 2 lakh, but they cannot provide loan to the public. Do remember, payment banks can only invest in the risk-free assets in the government security, but they cannot give loan to the public. Okay. They cannot provide credit card facilities also. Now, the effect of taking an asset on lease means you are taking on a rent, is shown on the dash portion of the balance sheet. So if we talk about the credit requirements, there are certain ways by which you can have what we can call by which you can have the capital, like for example, the 60% credit requirement of the country fulfilled by the commercial banking system. But still there is a lot of requirement of the public to get the credit facility, to get the loan or to get the funds. So that's why we have an alternate source of finance. And these alternate source of finance covers one of the function or one of the method, that is leasing. When you are giving something on a rent, okay, so the lease do not comes under the part of a debt. So that's why you do not have to represent that on the balance sheet. That's an off balance sheet part. So that's why right answer will be none of the above. The right answer will be what? None of the above. Clear? Next. So option. Okay. Next we have, under the recommendation of which committee was Adda established? So Adda is what? Insurance Regulatory and Development Authority of India. It's a regulatory body for the investment market. So we have a certain regulatory body like RBI, SEBI, Adda, PFRDA. They are the regulatory bodies which regulate the different market in the country. So Adda regulates the insurance business in the country, and Adda was created on the recommendation of R.N. Malhotra committee. And this committee in the year 2000 also gave the permission to the banks to perform the insurance business. So now insurance is a bank's third-party product, but the permission to perform in the insurance business given to the bank with the help of Malhotra committee only. Okay, so right answer is A here. Next, which of the or which is the correct sequence of a business phases? So business phases, if you are talking about, that's a phases of a business cycle. So business cycle is simply a S-shaped curve, like in the life cycle of a product. The product life cycle also have the same curve. Here, this is the expansion phase. This is your peak or boom period. This whole period is your contraction. This is your trough. That's a maximum lowest point. And from here, you will start recovering the economy. Your business will start recovering. So these are the phases. There are mainly 4 phases in your business cycle. So what is the sequence? Expansion, peak, contraction, and trough. Okay, these are the situation. But how to define in this option? So first of all, it's very obvious the economy do not start with the depression. No, it can't be right. Economy can start with the recovery phase, because you can see this phase can be also recovery now, because maybe possible here this used to be the situation. This is a cycle. That's the recurring nature of a cycle. It will keep going. So from here you went to the expansion phase. So it means recovery will be right. All the 3 options have recovery. After, this is the part of recovery. After recovery, you will go to this section. That's a boom section. So recession, no. Direct after recovery, you can't find the recession. Boom will be there. So it can be B or C. Now, after boom, contraction will start. Economy will start declining. All the economic indicators will start becoming negative. So first, when all economy is declining, after the 2 quarter or after the 6 months, if the GDP is continuously, in the 6 months period, if the GDP is continuously negative, that will create a recession. So that will, the recession. Depression is a situation that comes after the recession. No? Recession is the situation in which till the 2 quarter GDP was declining. That's create the recession in the country. And after recession, for the 2 quarter, it will create the depression. So right answer will be B. Recovery, boom, recession, and depression is the sequence of the business cycle phases. Okay. Next, law of demand shows the relationship between the dash. So law of demand is there, and law of demand has provided a certain relation that defines on the basis of the prices what will be changed. Okay. So whenever, according to law of demand, whenever its price is increasing, the quantity demanded will decrease. Or whenever prices are decreasing, the quantity demanded will increase. This is what the law of demand says. It means law of demand says that the price and quantity demanded, once again, the price and quantity demanded have an inverse relation. If the price increases, quantity demanded will decrease. If the price decreasing, quantity demanded will increase. So they have an inverse relation. That's what the law of demand says. So the right answer will be, it gives you the relation between price and quantity demanded, that is the C. And what relation they have? They have an inverse relation as per the law of demand. Do remember that. Okay, so right answer is C option. Next, which of the following statement is not correct about monetary policy committee? So what is monetary policy? If we talk about the monetary policy first of all formulated by Reserve Bank of India. Reserve Bank of India is the central bank of our country, and monetary policy is formulated by RBI. Okay. Now, Monetary Policy Committee was introduced by central government in the year 2016 first time. So, the Monetary Policy Committee statements, there are 3 statements in front of you. Out of these, which particular statement is wrong, that you have to tell. Not a correct statement. So, monetary policy was monetary policy formulated by RBI to maintain the price stability in the country. So, a lot of time you guys have heard about it, like RBI creates or RBI formulates a monetary policy to control inflation, but that's not right objective. The right objective is to maintain the price stability. But in our country, maximum number of times prices will keep rising. Inflation will be seen in the economy all the time. That's why we can say RBI control inflation, but that's not the main objective. Main objective is price stability. If the prices is rising, RBI will reduce that. If the prices are decreasing, RBI will increase that. That's the objective of monetary policy. Now, Monetary Policy Committee has 6 members. 3 will be appointed by RBI. They will be ex-officio member. 3 will be appointed by Government of India. That will be your academicians. Okay. Now, the RBI governor will act as the ex-officio chairman of the Monetary Policy Committee. The first statement is correct. And this committee was introduced by central government for the transparency and accountability. This is also true. And the inflation target will be taken by Government of India after consulting with RBI. This is also true. Under RBI Act 1934, Section 45ZB, it has been said that if we talk about, what? If we talk about RBI situation, RBI will not take the inflation target. Government of India will give the inflation target for the 5-year period, but after consulting with the RBI. So, right answer will be all are the true statement. None of the above is wrong. Okay, all are true. Next. Which of the following has not been put forward by Niti Aayog for the economic development of the country? So, Niti Aayog, you all know what is Niti Aayog, National Institution for Transforming India. So, earlier we used to have a planning commission. Planning commission was the planning body of our country that used to create 5-year planning for the development of the country or for the growth of the country. Now, the planning commission was replaced by Niti Aayog in 2015, but Niti Aayog started its planning in the year 2017. The reason? The 12th 5-year plan of the planning commission started in 2012, ended in 2017. So, till 2017, Niti Aayog was continuing the 12th 5-year plan of a planning commission. From 2017 onwards, Niti Aayog started its own planning. And the planning of Niti Aayog is 15 years vision document. It created a vision document for the 15 years that this is what we have to achieve after 15 years. And to achieve this target, it creates 7 years national development agenda that will include all the policies, all the strategies, all the planning to achieve the 15 years vision. And then 3 years action plan was introduced by Niti Aayog. Like after every 3 years, you have to evaluate the 7 years national development agenda just to know your planning is going right side or not. Is it having an impact or not? Is it achieving the objective or not? That's why in every 3 years, you have to evaluate the 7 national development agenda, 7 years national development agenda. So it do not have a 10-year long-term economic planning. It has 15-year vision document. It has 7 years national development agenda. It has 3 years action plan, but not the 10 years long-term economic planning. So right answer will be your C option. Okay, next. Fill in the blanks. The statement we have, increase in the general level of prices of goods and services is known as. So what happens now in the economy? In economy, money supply increases. Whenever the money supply increase, it will increase the demand of consumer. Obviously, now if I have more money, I will purchase more goods. If you have more money, you will purchase more goods, obviously. So if the money supply is more, demand will be increased. But we have also studied that the demand and supply have an inverse relation. They have what? They have an inverse relation. And if they have inverse relation, when the demand increases, supply will decrease. So demand is more than the supply. Now it will create rise in the prices of goods and services. It will create what? Rise in the prices of goods and services. So this will be known as what? This is the inflation situation. So whenever the prices of goods and services is increasing, that's create inflation in the country. So right answer will be D option. Okay. And at the time of inflation, the money value will always reduce. Why the money value will reduce? Because prices are rising. Okay. I used to purchase this pen of 100 rupee. Let's say, for example, I used to purchase this pen of 100 rupee. Now the price of this pen is 200 rupees. Okay, so earlier by paying 200 rupees, I used to purchase 2 pens, but I am now purchasing 1 pen. So because the prices rises, the money value decreases, because I will only be able to purchase 1 product by paying the money of 2 products. So it means the purchasing capacity of money is reducing. Earlier, the 200 rupee had the purchasing capacity to purchase 2 pen, but now it has only 1 pen purchase capacity. So whenever inflation is there, purchasing power of money will definitely decreasing because the prices are increasing. Okay, next. Which of the following is not the function of the World Bank? Which of the following is not a function of a World Bank? Let me know. So we have discussed World Bank is an international organization which helps its member country to reduce poverty. Okay, apart from that, reducing poverty, it also helps in what? In reconstruction of a country and development of a country. Okay, so it provides long-term loan to the member, true. It provides loan to the private investors, true. It provides loan mainly to productive activities, true. But it do not deal with the exchange rate stability. That's not a function of the World Bank. So right answer will be D option. It's not a function of World Bank. Okay, next. The dash is the monetary value of all the final goods and services produced by country's citizen, whether overseas or resident. So what does this mean? So when the production of goods and services done by the citizen, the production of goods and services done by the citizen of a country within or outside the geographical boundary. Okay, but it has to be done by the citizen. This person is an Indian person, Indian citizen. So this is known as what? This is known as national product. So whenever by the citizen production will be done, whether it is done within the geographical boundary or outside the geographical boundary, doesn't matter, but the production have to be done by the citizen. This will create a what? National product. Now, what kind of national product? Net or gross? So it can't be domestic. C or D cannot be the right answer. It can be either A or B. So national product is there, that we know. But gross or net value, it is a gross value. Because in the definition, in the statement, there is nothing mentioned here that the depreciation has been excluded or depreciation was minused. So that's why it's a gross value of production that has been done by the citizen of a country within or outside the geographical boundary. That's why B will be the answer. If after this statement, if we add minus depreciation, if we add this minus depreciation, then it will create the answer NNP. Okay, so here the answer will be your B option, gross national product, because the citizen is making production. If the within the geographical boundary production happens, that will be known as domestic product. Next we have, you have to pick here the correct statement. You have to find out the correct statement here in nominal and real GDP. You have to give the correct statement about the nominal and real GDP. So pick the correct statement. First is saying nominal GDP is the money value of all goods and services produced in a year. Nominal GDP is an indicator of the real performance of the economy as the price change over time. Real GDP is calculated as the money value of all goods and services produced in a year using the constant set of market prices that have prevailed in the certain chosen base year. So if I talk about the nominal and real GDP, so what is actually GDP? GDP means all the money value of all final goods and services produced within the geographical boundary of a country. So within the geographical boundary of a country, whatever production has been done in a financial year, that's your GDP. It has defined as a two ways, that is nominal GDP and a real GDP. Now the nominal GDP means the money value of all final goods and services that you have produced in a current year. So you are not comparing any value. Let's say 2023 is the financial year, that's the current financial year. In 2023, whatever production we have done in a country, that money value is 1 crore, 5 crore, 10 crore, 15 crore, doesn't matter what is the money value. But that money value will be treated as a nominal GDP. You are not comparing, you are not subtracting anything, you are not adding anything. Whatever production in a geographical boundary happen in a current year, the money value of that production is a nominal GDP. Okay, that's a nominal. Now, what about real GDP? Real GDP will be calculated on the constant prices. On constant prices, you will be calculating the real GDP. Or you can write here current prices in the nominal. The nominal will be calculated at the current prices and the real will be calculated on the constant prices. Constant prices means you have to compare with the base year. We have a base year 2011-12. So the prices of 2011-12 and the prices of 2023-24 will be compared. And then the value of GDP will be given to you. That's a real GDP. So the first statement is correct. Nominal GDP is the money value of goods and services produced in a year. Nothing is comparative here. Second is saying nominal GDP is the indicator of real performance of the economy as the prices changes. We are not talking about change in the prices. We are just talking about what price is the current financial year. So first is correct, second is incorrect. Third is saying real GDP on the constant prices with the base year comparison. That is correct. So A and C statement, this is B. Okay, and this is C. A and C statement is correct. That's why the right option will be C option. Okay, our statement A, statement B, statement C. So right answer will be C option. Clear? So do remember nominal GDP means calculated on the current prices, real GDP constant prices. Now, GDP, gross domestic product, is an important estimate, can be computed on the various methods. Which one of the following is not a method of the calculation of GDP? So I have told you GDP is the money value of all the final goods and services that has been done within the geographical boundary of a country. Now, there is a formula. GDP equals to consumption plus investment plus government expenditure plus net exports. And GDP depends on the 4 engines. We have a 4 engines. GDP depends on the 4 engines. First is households. And households demand will be represented as the consumption. Second, we have investments. Investment means will be private firms. Third, we have government. And the fourth, we have here external sector. It means outside the country, because that's covered the net exports. Na? So households, private firms, government and external sector, these are the 4 engines of GDP on which GDP is dependent. Okay, and GDP will be calculated with the help of expenditure method, production method, income method, but not with the geographical method. So right answer will be B option. Do remember the formula, do remember the 4 engines of GDP. Okay, right answer will be B, geography method. There's no such kind of method. Which of the following category comes under the priority sector? So what is priority sector? Priority sector are those sectors which according to RBI and Government of India, they need improvement, they need development. And there are total 8 sectors. Okay. First have export credit, second is agriculture, third is social infrastructure, fourth is renewable energy, fifth we have housing, sixth we have micro, small, medium enterprises, seventh we have education, and the 8th we have others. So these are the 8 sectors which has been defined by RBI and Government of India as a priority sector, because they need improvement, they need development, and until and unless you improve or develop these sectors, you won't be able to develop the economy. So right answer will be D. All are the priority sectors. Okay, do remember all the 8 sectors name. Next. The secondary sector includes activities such as, so secondary sector is an industrial sector where you convert natural resources by processing them into these finished goods or final goods. Agriculture, dairy, fishing and forestry, making sugar, wood and bricks, transport, communication and banking, and none of the above. So if agriculture is there, that's a primary sector. If transportation, communication, banking, teaching is there, that's a tertiary sector. So, but conversion into finished goods or final goods, it will cover the secondary sector. So the right answer will be B option. The right answer is what? That's a B option, making sugar, wood and bricks. Okay. Next, which of the following not one of the economic problem of economic system? Out of these 4 statements, what do you think which of the following is not an economic problem? What to produce, how to produce, for whom to produce, when does production start? So we know there are 3 economic problems only: what to produce, how to produce, and for whom to produce. So right answer will be D. This is not one of the economic problem of our country. Okay. Next. So right answer is D. A closed economy is an economy in which dash the money supply is fully controlled, deficit financing take place, only export takes place, neither export nor export takes place. So closed Indian economy is an open economy, and Indian economy became open economy after the globalization. When we started linking Indian economy with the world economy, that is the globalization, and that creates Indian economy as an open economy. So open economy means where export import is allowed, foreign trade is allowed. Closed economy where foreign trade is not allowed, neither export nor imports can be done by the country. So right answer is D. That's a closed economy. Next. A central bank of a country uses open market operation as the primary means of the implementing. So a central bank of the country, it uses open market operation as the primary means of implementing the tax policy, the monetary policy, the fiscal policy, the budgetary policy. So open market operation is the indirect instrument of the monetary policy in which RBI uses the government security to control the liquidity of the commercial banks. So the right answer will be monetary policy. Okay, monetary policy's indirect instrument is open market operation. Next, which of the following activities cannot lead to financial inclusion in India? So financial inclusion is what? Financial inclusion simply means to link each and every person with the financial product and services of a country at an affordable cost. So issuing general purpose credit card, it will help to make people come to the bank and have a financial product and services. Opening bank branches in unbanked areas, this is also the part. Opening no-frills account. No-frills account means a zero balance account, okay? But strict KYC norms are there. If strict KYC norms are there, people will not be able to justify or will not be able to provide all the official valid document, or certain kind of restriction will be created. And people will start having the financial services and products because of this issue. So right answer will be C. It is not going to help in the financial inclusion. Okay. CSR, Corporate Social Responsibility, Schedule 7 of the Companies Act. It helps to eliminate which of the following? Hunger, poverty, or malnutrition. So which of the following will be helped by the CSR to reduce from the country? Let me know which of the following is correct. So right answer is all. CSR, corporate social responsibility, help to eliminate all or certain objectives of CSR is going to match with the sustainable development goals also. Okay. Next, which of the following policy rates are reviewed by Reserve Bank of India at the time of bi-monthly review of monetary policy? Bank rate, repo rate, savings bank rate. Which of the following is the correct option? A, B, C or D? So which of the following policy rates are reviewed by the RBI at the time of bi-monthly review of the monetary policy? So right answer is bank rate, repo rate, but not the savings bank rate. Savings bank rate will be decided by the banks themselves. After 2010, banks itself decided what rate of interest they want to give at the savings bank account. So right answer will be C. Bank rate is for the long-term period, repo rate is for the short-term period. Now, priority sector lending guidelines will be applicable on which of the following banks? Land Development Bank, Foreign Bank, RRB or Cooperative Bank. If I talk about PSL guidelines, RBI divided into the banks into two categories, domestic bank and foreign bank. Domestic banks will cover commercial bank, land development bank, RRBs, small finance bank, cooperative bank. All these are the part of cooperative, domestic bank. Okay, commercial, RRB, small finance bank, cooperative bank, they are under the domestic bank. And as well the land development. And the second category is foreign bank. 20 or more than 20 branches, less than 20 branches. These are the two categories, domestic and foreign. And all these banks right now have to follow the guidelines of the PSL and have to provide a certain target and sub-targets of RBI in the PSL category. Next, which of the following statement is incorrect about infrastructure? So infrastructure, you know, physical infrastructure is there that connects your economy. That gives physical network to your economy to be connected. So infrastructure is important contributor to economic development. Obviously, it gives you the physical network. Infrastructure is required to provide support service. Obviously, it required. But infrastructure facility directly impact on the production of goods and services? No. It do not directly impact. It indirectly impacts. Obviously, it impact in the production of all goods and services, but not the directly, indirectly it will impact. So right answer is B. This is not a correct statement. Okay. Next. The term economic cycle refers to, you can call economic cycle as a trade cycle. You can call economic cycle as a business cycle. These are the three names, है ना? Business cycle, economic cycle, or trade cycle. So what does business cycle means? Declining savings? Obviously not. Increasing unemployment? Obviously not. It's a cycle, na? It's not the unemployment increasing or something else. Ups and downs in the production of goods. That will be a product life cycle, not the business cycle. Fluctuations in the aggregate economic activity over the time. So right answer will be A. This is the trade cycle, business cycle, or economic cycle. Okay, next. Opening and improving the economy with other major economies to take it to the international level is known as. So when you open your economy, you improve your economy, you link your economy at the international level, that's what? That's the globalization. Globalization means opening up of your economy. When you linked Indian economy with the world economy, with the international economy, that's the globalization. So right answer will be C option. Okay, that's a globalization. Because of which India became what? Open economy in the year 1991. But when? When were economic reforms introduced in India? It was introduced in 1991, we all know. So C and D cannot be right. It is December or July. So right answer is July. Right answer is July 1991, economic reform was introduced. Next. Oh, option is already visible. Chalo koi nahi. Why were economic reform introduced in India? So economic reform is LPG. It was introduced because of due to many reasons. First reason, fiscal deficit of government was increasing. Second reason, inflation was increasing. Third reason, foreign currency reserves were reducing. It left only for 14 days. It means for 2 weeks only. After that, we won't be able to pay our import bills. Fourth, after that, we have public sector undertakings were having a worse financial condition. Then due to Gulf War, crude oil prices was increased. And India was dependent on the crude oil to be imported from the Gulf countries, right? And after facing all these issues, we also faced the balance of payment crisis. And after facing all this issue, we went to the World Bank and IMF to ask help from them. And they said, we are going to give you the funding, but if you do the economic reform. And then in July 1991, India did the economic reform. And these are the 7 reasons of introducing economic reforms. Okay. So poor performance of public sector, true. Fall in foreign exchange reserve, true. It was left only for 14 days. But deflation, no, it was not there. So A and B will be the right answer, D option. Okay, these are the 2 reasons and rest reason is written in front of you. Okay, now, so right answer is D. Now, which section of the Companies Act 2013 provide legal support to CSR? So CSR is what? Corporate social responsibility. So which of the following section is defined in the CSR? That is section 135. This is important. This has been asked in May 2023 also. So right answer is A. Now, demand schedule means. So the law of demand says that the relationship between price and quantity demanded is inverse. If you show this relationship on a graph, it will be known as demand curve. If you show the relationship between both on a graph, that's a demand curve. If you show this relationship on a table, that will be known as demand schedule. Okay, so right answer is relationship between price and quantity demanded, that will represent it on a table in a tabular form. If you represent that in a graph, that will be known as demand curve. So right answer is B option. Next, what does A and BC stands for? A and BC is a part of your PSL chapter. When RBI gives the target of PSL, it says percentage of A and BC or C or B, whichever is higher. So here A and BC stand for adjusted net bank credit. It stands for what? Adjusted net bank credit. If you want to know what is adjusted net bank credit and how it should be calculated, you can go and watch the session that I take Monday to Friday at 7:30 AM only on Offices at 24/7. There I have given you the explanation how to calculate. Now, what are the benefits of globalization? Globalization means to open up your economy, to link Indian economy with the world economy. What are the benefits? Use of innovation technology, true. Low production costs, true, because you have opportunities. You can decide where you will, at the less prices, you will get the much benefits. Get access to various new cultures. Right answer is all. All are the benefits of the globalization. Okay, all are the benefits of globalization. Now, which sector provides maximum employment in India and how much percentage? So there are 3 sectors, primary, secondary and tertiary sector, है ना? So I have told you this answer earlier in the session only, that agriculture gives maximum employment and that is around 48.9%. Okay? So A option is there. Which of the following revolution covers the pharmaceutical products? Your revolutions are very important. The secondary sector, sorry. India's industrial sector means the secondary sector and it will cover all these subsectors. So right answer will be all. Okay, right answer is what? All. D option. Do remember the subsectors also. Agriculture have subsectors, secondary have subsector. In fact, the tertiary have subsector. Do remember them. The Britishers introduced the following system in the country to take excessive land tax reforms or excessive tax from the farmers. Zamindari, Malwadi and Uthai. All are the system that introduced by Britishers to exploit the farmers also, so that they will be able to take maximum tax or excessive land tax from the farmers, so that the farmer have to come under the Britishers. That's why these 3 systems were introduced. So right answer is D. Okay. Now, what is known as the study of individuals? So we know there are 2 branches of economics, micro and macro. Microeconomics is the study of individual unit. Macroeconomics is the study of economy as a whole. So right answer here will be a microeconomics, that's a B, because individual level study you are doing. If it was asked a study of whole economy, then it will be a macro. Now, which of the following are the objective of economic planning? So economic planning have total 6 objectives. How many objectives? 6 objectives. First is economic growth, second is poverty, third is employment, fourth is self-reliant, okay, and fifth is social justice and this is J, social justice and reduce inequalities, reducing inequalities. Okay, and the 6th one is modernization of economy. So these are the 6 objectives of doing economic planning in the country. So the right answer will be all. Okay, right answer is all. Good evening everyone, welcome to Officers Adda 24/7 and I am here with all of you to discuss the rapid fire session on Indian economy and Indian financial system. So what is this particular session, and in this particular session what we are going to discuss and how we are going to discuss in this particular session, first let me tell you that, and then we will continue the session. So you can see this is a rapid fire session for Indian economy, Indian financial system, in which 50 questions in 15 minutes we are going to discuss for your Indian economy, Indian financial system of all the subjects. So if you remember on the last Sunday we had a module A master class in which we have discussed the module A top 25 questions. In today's session we are going to combine the whole syllabus of your IFS and we are going to practice the 50 questions that is related to the concepts of IFS. Okay, so without wasting more time, let's start the session. So I am your mentor Amanjot Kaur and I will be taking up your Indian economy, Indian financial system as well as PPB, principles and practice of banking subject for JAIIB. Okay, so let's just start in this particular session. What we are going to do, as you can see, IFS rapid fire session is it 50 questions in 50 minutes we are going to discuss. So you have to be very active in the session, because what we are going to do, we are going to cover this particular session in very speed, because in 50 minutes we have to complete 50 questions. So the first question is in front of your screen, that is saying contribution of which sector is maximum to the Indian economy. So which particular sector contribute maximum in the Indian economy? That is primary sector, secondary sector, tertiary sector, or all of the above. You have to answer out of these 4 options which particular sector contributes the more in the Indian economy. So if I talk about primary sector, that's agriculture sector, secondary sector is industrial sector, tertiary sector is a service sector, and the maximum employment generation will be done with the help of primary sector, but maximum income generation comes from the tertiary sector. And the question is asking for maximum to Indian economy, the contribution was from the tertiary sector, or it is from the tertiary sector. The right answer will be your C option. Okay, now let's move to the next question. That's the second question. In terms of GDP purchasing power parity, India is ranked dash in the world in 2002. So in 2002, what was the rank of India in context to the GDP purchasing power parity? Now, what is GDP? GDP is the money value of all final goods and services that has been produced within the geographical boundary of a country during a financial year. Okay. Now, here, as per IMF World Economic Outlook, April 2022. So, IMF World Economic Outlook 2022 report was published, in which we are asking what was the rank of India? First, third, fourth, or 7th? So out of these 4 rank, what was the rank of India? So do remember, what is GDP? The money value of all final goods and services produced within the geographical boundary of a country. Purchasing power parity means we are talking about the purchasing capacity of your country, currency in comparison to other currencies. And India stood at 3rd rank in the world. Okay, so the right answer will be your B option. India got the 3rd rank in the world in 2022 in context to the GDP purchasing power. So right answer will be B option. Next question is talking about what is the lock-in period in PPF account, and PPF we know public provident fund it is. So what is the lock-in period of public provident fund? First option is saying 5 years, second 10 years, third 12 years, fourth 15 years. So what do you think? I think this is a very simple question because you guys always deal with the public provident fund accounts, right? So for all of you, this is a kind of very simplest question. So right answer will be your 15 years. The right answer is 15 years. Within 15 years, you will be maintaining the public provident fund account in your bank. So right answer will be 15 years. That's a lock-in period of PPF. Okay, next question. Next question is talking about in which year were primary dealers introduced. Now the primary dealers were introduced by Reserve Bank of India, by RBI. For what purpose? For the purpose of helping the selling and purchasing of government security. As we know, RBI is the agent of Government of India. The selling purchasing of government security is done by RBI. So RBI formulated or RBI introduced the primary dealers in the country for the purpose of trading in the government security. So they can participate in the government securities trading. And it was introduced in which year? 47, 74, 95, 2005. So the right answer is primary dealers introduced in 1995. By whom? By Reserve Bank of India. Do remember that also. Okay, and it purchased the government securities from RBI and then sell in the market to the public. So right answer will be C option. Next question. Next question is talking about what is the minimum tenure for commercial papers. What is the minimum tenure for commercial paper? If I talk about commercial paper is an instrument of money market. Now money market is regulated by RBI, the central bank of our country, and money market covers a lot of instrument. Out of that, one is your commercial paper. Commercial papers are issued by corporates. They are unsecured negotiable money market instrument. And their maturity period will be as per the maturity period duration of money market, that is maximum 1 year, but the minimum will be what? The minimum will be 7 days. And why I am saying that the commercial paper is an unsecured money market negotiable instrument? Because commercial papers are issued by corporates, or there is a chances that the corporate can do the fraud. So that's why it is unsecured negotiable money market instrument. The minimum period is 7 days and maximum period will be 364 days. The minimum amount of which the commercial paper can be issued, that is 5 lakh. Apart from that, if you want to issue the commercial paper for more than 5 lakh rupees, you can issue with the multiple of 5 lakh, like 10 lakh, 15 lakh, 20, 25, 30. In this multiple only you can issue the commercial paper. The minimum you can issue of 5 lakh. Okay, the minimum duration 7 days, the maximum duration 364 days, issued by corporates, and they are unsecured negotiable money market instrument. Next question, the maximum period of notice money. If I talk about notice money, again notice money is an instrument of money market. We have a call money, notice money and term money, these 3 instruments in the money market, that is the part of interbank transaction. In call money, notice money and term money, in all these 3 instruments of money market, only banks can participate and banks give loan to each other. The only difference between these 3 is the duration. If I talk about call money, the call money is for overnight duration. Overnight duration means 24 hours. So when banks are giving loans to each other for 24 hours for overnight duration, that is known as your notice money. In the term money, it will be 15 to 364 days. Or at some places, it will be written more than 14 days. More than 14 days. So it will be 15 to 364 days will be the duration of term money. And for the notice money, it is 2 to 14 days. and after 14 it will convert to the term money. Now it is asking the notice money maximum period, that will be what? The 14 days. So the right answer will be C option. So call money, notice money and term money, they have only difference of duration, no other difference will be there. So right answer will be your C option. Okay, now do make sure you keep answering the questions in the comment section. I will not be able to check all the comments because we have to do this as a rapid fire, but I will be explaining the context of the topic of the particular question, Hana. But yes, keep answering the questions. Under the recommendation of which committee was ADA established? So ADA is Insurance Regulatory and Development Authority of India. It's a regulatory body of insurance market, and it was established on the recommendation of which committee it was talking about? Malhotra Committee, Narasimhan Committee, Tandon Committee, Ghosh Committee. So if we talk about ADA, Insurance Regulatory and Development Authority of India, is the regulatory body for our insurance market, and it was introduced by, or it was recommended by, R.N. Malhotra Committee. What committee it was? R.N. Malhotra Committee it is. Okay, chaliye next. So right answer will be A option. Now the next question is talking about state development loans are instruments in which of the following market? First of all, it's very easy to understand. State development loans we are talking about. Hana? It means a kind of market where you are giving loan to the companies, to the government, state government, to the companies, to the corporate, to the central government only. So it means very obvious, loan means the debt instrument. This is a debt instrument. It means you are giving loan to someone, and this particular instrument comes under which market? Is it money market? Is it credit market? Is it debt market, or is it derivative market? So now I think it is very easy to answer which of the following will be this right option. First of all, debt market means the market in which you are providing loan, and the debt market cover the certain securities like bonds. It cover government securities, it cover debentures, it will cover state development loans, etc. All these are the part of your debt market because you are providing loan to the government, loan to the company, loan to the state government by debt market. Okay, so right answer will be your C option, that is a debt market. Now, sorry, it's a C option, not D, it's a C. That's wrong. Right answer will be C. Okay, state development will be a part of your what? Debt market. Next we have, that is talking about credit certificate of deposit are instrument in which of the following market? Now if I talk about certificate of deposit, certificate of deposits are issued by banks and financial institutions. Hana, do remember that certificate of deposits are issued by banks and financial institutions. They are short-term financial instrument in which banks and financial institutions raise capital by issuing this. The minimum time period to issue a certificate of deposit is 7 days and maximum will be 364 days, right? The minimum amount you can issue in the certificate of deposit, that is 5 lakh, and after that multiple of 5 lakh can be issued. So this is the detail of the certificate of deposit, and it is the instrument of which market? The money market. So the call money, notice money, term money, certificate of deposit, commercial papers, okay, then treasury bills, that is also known as T-bills, cash management bills, collateralized borrowing, lending obligation, and cash management bill, okay, so etc. All these are the money market instrument, and all these are regulated by RBI because money market is regulated by RBI, and they all are short-term financial instrument. Okay, so right answer will be money market. Next question is talking about what is the authorized share capital of regional rural bank. What is the authorized capital of RRB? The question is asking. If I talk about RRB, Regional Rural Bank, so RRB is the bank, it's a scheduled commercial bank, and this bank was established to uplift the rural economy. RRB was established for what purpose? To uplift the rural economy. And first RRB was established on 2nd October 1975. That was the Prathama Gramin Bank in Muradabad, UP. Apart from that, the RRBs will have shareholding divided among central government, state government, and sponsored bank. Central government have 50%, state government will have 15%, and sponsored bank will have 35%. 25%. And the authorized share capital of RRB is 2,000 crores. How much it is? It is 2,000 crores. Okay. Why RRB was established? For the upliftment of rural economy. First RRB was Prathama Gramin Bank. So right answer will be your D option. Now, next question is talking about dash is an option. Dash is an option that gives buyers of the option the right to buy the underlying assets at the strike price on or before the expiry date. So first of all, when we are talking about option, it means this question is related to derivative market, because derivative market has one of its instrument, that is option, and we have two types of options, that is a call option and a put option. So out of that, you have to tell which of the following option we are talking about: call option, put option, open, and none. So open is not an option. Either it can be call, it can be put. So you can focus on this term. The keyword of this question is buy. So you are giving a right to someone to buy the certain underlying asset, buy the underlying asset. You are giving a right, not an obligation. It's not mandatory that you have to buy. No, that's an option. If he or she wants, they can purchase. Otherwise, no. So when we call someone, why we call someone, let's say for example, why we call someone? Because whenever we need them, whenever we have to talk to about something with them, whenever we have to make sure that this particular task will be done by that particular person. So whenever we need a person, we call them. So the call option means simply what? You want to buy the security. So the right answer will be your A option. Okay, right answer will be your A option. And put option means when you want to sell. Put option means when you want to sell, that's a put option, but when you want to buy, that's a call option. So right answer will be A. Now, according to RBI Act, a scheduled bank has how much paid up capital? So RBI Act 1934 Schedule 2 talks about that what amount of paid up capital should a scheduled bank will have. Now, what is scheduled bank? First of all, scheduled banks are those banks which are listed under the second schedule of RBI Act 1934. So all the banks who are listed under the second schedule of RBI Act, those banks will be known as scheduled bank. Okay, and these banks have to fulfill two conditions. The first condition is they have to maintain the reserve ratio, that is CRR SLR. And the second, they have to have a minimum paid up capital of 5 lakh, not less than that. So the right answer will be A option. So these two conditions have to be fulfilled: maintain the reserve ratio, and the second one is 5 lakh paid up capital. Now, when Market Establishment Scheme was introduced, MSS, Market Establishment Scheme. So Market Establishment Scheme is a scheme in which RBI provides loan to commercial bank for Market Establishment Scheme is the scheme in which Government of India gives its security to RBI, and RBI sells that security in the market to maintain the liquidity of the market. And the securities will be T-bills and dated government security. Dated government security. This is a scheme. So the Market Establishment Scheme is a scheme in which RBI sells or purchases the government securities to maintain the liquidity in the market. So the right answer for this particular question will be 2004. In 2004, the Market Establishment Scheme was introduced in which government security, treasury bills and dated government security will be used to maintain the liquidity of the market. So the right answer will be 2004, D option. Okay, next question. Next question is talking about which is the first credit rating agency in India. Is it SMERA? Is it India Ratings? Is it CRISIL? Is it ICRA? So which of the following is the first credit rating agency in our country? Also, let me know who regulates the credit rating agencies. So who regulates the credit rating agencies, and also which of the following is the first credit rating agency? So apart from this, we have a CARE credit rating agency, CIBIL is there, Fitch is there, Moody's is there, S&P is there. So many credit rating agencies we have. Out of these, we are asking which one is the first one and who regulates it? SEBI. All the credit rating agencies will be regulated by SEBI, and the first credit rating agency of our country is CRISIL, Credit Rating Information Services of India Limited. So right answer will be C option, CRISIL. Okay, next Next question is asking in which year derivative trading commenced in India. So what is derivative? Derivative is simply a product and the value of that product will be derived from the underlying asset, as we have seen earlier. Hana? So underlying assets are there who drive the value of derivatives. So here the question is asking in which particular year the derivative started their trading. In which particular year the derivative started its trading. Okay, so the derivative started its trading in which year? In the year 2000. In which particular year? In the year 2000, derivative started its trading. Derivative we have two types of, that is over the counter derivative and exchange traded derivative. Over the counter derivative means there is no mediator. The party came together at the platform and agreed to sell or purchase. And the exchange traded derivative will be a derivative in which stock exchange will be available. And if I talk about in India, the derivative, exchange traded derivative will be risk free and over the counter will have a counterparty risk. Now next we have, as per RBI's assessment report, how much time will it take for India to recuperate from the financial setbacks that was caused by COVID-19 pandemic? So because of the COVID-19 pandemic, not only India but also all the world has faced a certain setbacks, financial setbacks. So in how many years we are capable of recovering from that setbacks according to RBI? 13 years, 10 years, 8 years or 15 years? So according to RBI, it has said that by the year 2034-35, we will be facing the financial setbacks because of the COVID-19. It means it will take around 13 years. How many years? As per RBI, it will take 13 years to help India or to make India come out of this COVID-19 pandemic issue. Okay. Now, next question. Central government can give directions to RBI only after consulting. So, central government is allowed to give directions to RBI only after what? Consulting with whom? The governor of RBI, the central board of RBI, the finance commission of RBI, the finance commission or the president of India. So after discussing, after consulting with whom, government is allowed to order RBI. Like in the demonetization case, demonetization can be done by the government. Okay, but earlier, before that, prior, you have to take the permission of RBI, and this was done by the consultation of governor of RBI. So without taking any consultation from the governor of RBI, government of India cannot give any order to RBI. Okay, consult from governor of RBI is required. What is the authorized capital of NABFID? Now, NABFID is very important. Do remember that. The reason behind it, NABFID is the latest development financial institution established in the year 2021. This is the latest development financial institution, and it is providing finance for the infrastructure development. Okay, so this is a national bank for financing of infrastructure development. That is the NABFID, and the authorized capital of NABFID is 1 lakh crores. Okay, so right answer will be D, and do remember it is the latest development financial institution. Right option will be D option. Next question is talking about market economy is also known as. What is the other name of market economy? So I have told you that there are 3 types of economic system. That is capitalistic, socialistic and mixed economic system. They have been named differently, or they have been named on the basis of the 3 major decisions of the country. That is what to produce, how to produce, for whom to produce. If government is deciding, that is socialistic economy. If private enterprises is deciding, that is capitalistic economy. And if both are deciding, that's a mixed economy, right? So here, what is market economy also known as? It's a capitalistic economy. It depends on the market forces, that is a demand and supply. It means the private industrialists are running this company. So the right answer will be your B option, that is capitalistic economy. That's a market economy. Okay, it is also known as laissez-faire economy. Economic survey is published by whom? First is saying here it is published by Finance Ministry, second saying Niti Aayog, third saying RBI, fourth is saying all of these. So it's very obvious it can't be all of these. If we talk about economic survey is published 1 day prior to your budget. Like budget comes on 1st of February, so your economic survey will be presented on 31st of January, right? And it will be presented by Finance Minister. So the budget and the economic survey both are presented by the Finance Ministry, and the Finance Minister will present that actually, and the economic survey will cover the study on the economy. Okay, it will cover the study on the economy that we have done. Clear? Next. Next question we are talking about, as per the World Bank classification, Indian economy is a dash economy. So we know World Bank is an international organization. It's classified the economies on the basis of the per capita income. On what basis? On the basis of the per capita income, World Bank has classified economies into 4 categories. That is low income, low middle income, upper middle income, or high income. Out of these 4, India, as per the per capita income study, got the lower middle income category. India comes under what? Lower middle income category. Okay, so right answer will be your B option. Next, what is the minimum age for a person to join the Atal Pension Yojana? So Atal Pension Yojana was introduced by Mr. Narendra Modi from Kolkata in 2015. In May 2015, Mr. Narendra Modi introduced this scheme. Atal Pension Yojana is for unorganized workers. It provides pension per month between 1,000 to 5,000 as per the contribution years and the contribution amount of the customer, of the person. And the age will be 18 to 40 years. Okay, the minimum age is 18 years and the maximum age to enroll yourself in the Atal Pension Yojana is 40 years. So the right answer will be your C option. Now, which among the following is not one of the function of RBI? First, controlling inflation. Second, banking supervision. Third, lender of last resort. Fourth, controlling employment in the country. So it's very obvious inflation will be controlled by using the monetary policy instrument. Banking supervision RBI do by the help of Banking Regulation Act. RBI got this authority to do the supervision. Lender of last resort means whenever commercial banks need a capital, they need a fund and their funding is not available in the market anywhere, they can go to the RBI and ask, and they can ask for a loan from RBI. Okay, that is what we are talking about, controlling employment. That is the lender of last resort. When RBI gives loan to the commercial bank, this is the last option for the commercial bank. Okay, now the right answer will be your obviously D. That is controlling employment in the country. That is not under the hands of RBI. That's the part of Government of India. Okay, now the next question is talking about, name the section that mandate banks to maintain CRR with RBI. Like which section it is which mandates the bank to maintain the CRR with RBI. CRR is cash reserve ratio that have to be maintained by scheduled commercial bank with RBI in form of cash as a percentage of the NDTL. That is your CRR. So let me know in which particular section it is defined, and do make sure you be active in the session and answer all the questions. Okay, so let me know section option A, B, C or D, which of the following is correct. Okay. So very good, the right answer you guys are saying that will be section 42(1) RBI Act 1934. So what is CRR? CRR is cash reserve ratio, in which all the scheduled commercial banks have to maintain a certain percentage of their NDTL in form of cash with RBI. Okay, and that is defined under the section 42(1) of RBI Act 1934. So right answer will be A option. Now the next question is talking about who is the regulator of insurance sector in India. So we have just discussed that on the recommendation of Malhotra committee, we have established the regulatory body of insurance sector. So SEBI, Adda, NABARD, PFRDA, out of these 4, which of the following is the regulatory body for insurance sector? So right answer will be very good. Adda, Insurance Regulatory and Development Authority of India will be the right answer. B option is correct. Now the next question is talking about section dash of which act of RBI Act 1934 gives the sole power to RBI to issue currency note except rupee 1. So 2 and above all currencies can be printed by RBI except rupee 1. This authority, this sole right has been given to RBI under which section of RBI Act 1934? So RBI can print all the denomination of currency except rupee 1 because 1 rupee note will be printed by Government of India. And the right answer here will be 22. So section 22 talks about that RBI has all the right to print the currency notes except rupee 1. Okay, so right answer will be C option. Next question is talking about which of the following is not part of the formal financial system. So we know the financial system are divided into two parts, formal and informal. Formal financial system means simply where you have to follow rules and regulation, where there is a regulatory bodies available who tells you what to do and what you are not able to do. And in case of informal financial system, there is no regulatory body. They can be deciding by themselves what they want to charge and how they want to perform. So the formal financial system is regulated. So out of these, which of the following is not a formal financial system? Banks are formal financial system, NBFCs are part, insurance are the part of the formal financial system, but not the associations. Associations are the part of your informal financial system. So the right answer will be A option. Okay, next question is talking about which of the following is not a part of informal financial system. Informal means where there is no regulations, like the association. They can decide by themselves. When I am taking loan from my relatives, from my friends, let's say for example, money lenders and all, they all will be the part of informal financial system, but the formal financial system will cover the institutions, entities which follows a certain rules, regulations of the regulatory body. Hana, so here, money lender, mutual fund, relative, Mahajan, which of the following is not a part of informal financial system? Very simple, mutual funds. Mutual funds are regulated by SEBI. They are the part of formal system, not the informal system. Okay, and the formal financial system in our country started from the year 1770. Do remember that also. Now, which was the first bank to be established in India? And with the help of first bank, we have introduced the formal financial system in India. So out of these four, what do you think which of the following is the first bank which established in India? So this bank was established in the year 1770. It had its headquarters in Kolkata, and out of these four, the Bank of Hindustan was the bank which started the formal financial system in our country. So right option will be your C option. Okay, so do remember the question can be asked which of the following is the first bank of country, or which of the following bank is the bank which started the formal financial system and in which year? So in 1770, Bank of Hindustan. Presently, how many local banks are there in India? How many local banks are there in India? 2, 3, 4 or 5? So local area banks are the part of non-scheduled banks. They are not listed under the second schedule of RBI Act. Is it 2, 3, 4 or 5? There used to be 4, then out of 4, 1 has been converted, then it remained 3. And now we only have 2 local area banks that has been named as Coastal Local Area Bank and Krishna Bhima Samruddhi Local Area Bank. This image I have taken from RBI's website from the list of banks. So now, right now, these are the 2 local area banks available in the country only. Okay, next. In which year Reserve Bank of India was established? So RBI is the central bank of our country, and Hilton Young Commission, also known as the Royal Commission on Indian Currency, this is the committee that has been introduced, or that has been recommended first time that we need to have a central bank of the country. And which year it was done? In 1926, Hilton Young Commission given the first recommendation to start the Reserve Bank of India. Now, in which particular year this RBI was established? The year was 1935. 1st April 1935 is the year when RBI was established. Okay. Next. What is the minimum capital requirement for setting up a universal bank? So what was the minimum capital requirement for setting up universal bank? Universal bank is a concept under which all the commercial banks will become. Universal banking services are the services that will be provided by bank. Like for example, in under a roof, you are getting all the kinds of facility, all the kinds of activities of a bank. Deposit, withdrawal, lending, check clearance, demand draft, locker facility, safe custody, then international debit, credit card, mutual fund, insurance, pension, etc., demat account, everything is available. That's a universal bank. And it was 500 crore. So universal banks are like what? Public sector bank, private sector bank, foreign bank. And to establish these types of bank, we need how much capital? 500 crores. Okay. Now next, if we talk about capital which is required, so 500 crore. Now, what is the rate of interest payable on CRR funds? So CRR we have discussed, cash reserve ratio, defined under the section 42(1) of RBI Act 1934, in which all the scheduled commercial banks have to maintain a certain percentage of their entity with RBI in form of cash. So what interest will be paid by RBI to the commercial banks on CRR? 4.552 or no interest is payable. So in the banking crisis 1999, this was the only year in which RBI paid interest to the commercial banks on CRR. Otherwise, banks are not allowed or banks are not capable of earning any income on the CRR because no interest will be paid by RBI to the commercial banks on the CRR. So the right answer will be D option. Okay. So right answer will be D option. And right answer D. Next. What is the maximum period for which an NBFC D can, this is NBFC, okay, non-banking financial companies. So which of the following maximum period is in which NBFC C can accept the deposit? So this is what? This is the C, non-banking financial companies. This is C. So NBFCs can accept deposit after it was allowed after it was allowed by RBI. So they can accept deposit for minimum and maximum duration under a scheme or arrangement. So minimum is your 1 year and maximum is your 60 months. It means 5 years. So 1 year to 5 years is duration, or you can call it 12 months or 60 months. So right answer will be your C option. Okay, right answer will be your C option. For 60 months, it means for 5 years, it can accept deposit in under any scheme or arrangement only, right? Now, what is the minimum capital requirement for setting up a small finance bank? So, small finance bank was introduced by RBI for what purpose? For the financial inclusion purpose. Now, what is financial inclusion? Financial inclusion simply means to link each and every person with the financial product and services at an affordable cost. For this purpose, on the recommendation of Usha Thorat Committee, a small finance bank was started establishing, RBI started giving license in 2015, and the first small finance bank we have a Capital Local Small Finance Bank. And initially RBI said to start small finance bank you have to give 100 crore capital, but now it has been increased to 200 crore. So the right answer will be your B option. No, it's not 500 crore, it is B. That is 200 crore, right? Okay, so right answer will be 200 crore. Minimum capital required to open small finance bank. In 2015 it was 100 crore, but now it is 200 crore. Next. Which of the following is the regulator for housing finance company? Who regulates the housing finance company? So if we talk about housing finance companies, NHB, National Housing Bank, you guys all have heard about it. So NHB used to be the wholly owned subsidiary of RBI. Wholly owned subsidiary of RBI means 100% capital to establish the NHB was given by RBI. But in 2019, RBI sold the NHB to Government of India 100% capital with the amount of 1450 crores. This 1450 crore paid by government to RBI to purchase the NHB. So earlier NHB used to regulate, NHB used to regulate the housing finance companies, but it was done by RBI itself now onwards. From 2019 onwards, RBI itself regulates the housing finance company. Next, Next we have in which year the RBI was converted into a public entity. So RBI was the private shareholders bank when it was established, because to establish RBI we needed a initial capital of 5 lakh, 5 crore, and we do not have that much capital. So we issued the share of RBI and a lot of public have purchased the share. So RBI was the private shareholders bank at the time of its establishment. But after Government of India has done the nationalization, so in which year this has been done? In 1949, 1st of January. So 1st January 1949, RBI's nationalization was done, and since then RBI became the public entity. Okay. Now next, which was the first development financial institution that was set up in India? The first development financial institution was IDBI, SIDBI, ICICI, IFCI. Which of the following is first? So IDBI is not anymore the development financial institution. It has been converted into commercial bank. Similarly, ICICI Bank also converted into commercial bank. IFCI and SIDBI, they both are right now the development financial institution. And the first development financial institution was IFCI. So right option will be D option. It was first. Okay. And the same related question is, which of the following is the latest development financial institution that was set up in India? Latest one that has been set up. Okay. So the first option is saying your IDBI, second SIDBI, third NABARD, fourth NAFED. Out of these four, which of the following is the latest one? So the latest one is NAFED, that was established in 2021. It was established in which particular year? 2021. And National Bank for Financing of Infrastructure Development, that is NAFED. It provides finance for the infrastructure development. So this is the latest one, and the first one is IFCI. Now, in which year did RBI introduce the lead bank scheme? So lead bank scheme was introduced by RBI, in which RBI wanted to have a branch expansion and credit planning. So RBI wanted that more and more branches will be open in certain areas where there is no reach of a bank. And the other thing, RBI said that we wanted a kind of bank who do the credit planning in the villages. And for that purpose, a particular public sector bank or a private sector bank used to be decided by RBI and named as a lead bank in that particular district. And that lead bank have to do what? That lead bank will be continuing the what we can call it, the branch expansion and credit planning in that particular district. That's the lead bank. So in which year it was introduced? In the year 1969 it was introduced, the lead bank scheme, December. So December 1969 RBI introduced the lead bank scheme. Okay, B option. Now next, a transaction carried out at an ATM of the card issuing bank is called. Like there is a ATM within the of a bank who issued a card for you. Let's say, for example, I opened a bank account in State Bank of India and I have account in SBI and I have a ATM of SBI. So when I wanted to use my ATM, I go to the SBI ATM and I withdraw money from there only. What type of transaction is it? Is on us, off us, on you, or on me? What type of transaction is it? On us, on, off? Let me know. Okay, so the right answer will be on us. Right answer will be on us. When you are using the bank's ATM and withdrawing from the bank's ATM machine only, you are using the bank's ATM card and withdrawing from the bank's ATM only, that will be on us transaction. And if you have, let's say if you have SBI ATM card, and you withdraw from the any other bank's ATM, let's say PNB ATMs, you are withdrawing the money. So that will be off us transaction. Okay, on us, off us. Now next question is talking about what is the maximum balance that a payment bank can maintain in each account. The maximum balance. So earlier when 2015 Nachiket More committee introduced the payment bank, earlier it used to be 1 lakh, but RBI has increased to 2 lakh. So per customer 2 lakh can be deposited in the account of payment bank. It was introduced for the purpose of financial inclusion only. The next question is asking about Mr. Adam Smith defined economics as what? So I have told you the different I have told you already the different I can say definitions of economics have been given by Mr. Alfred Marshall, by Mr. Adam Smith, by Mr. Leon Robbins, by Mr. Samuelson, Paul Samuelson. So out of the four, Mr. Adam Smith has given the definition of economics on the basis of what? A study of welfare, study of means and ends, a study of wealth, or none of these. So do remember, Mr. Adam Smith has given on the study of wealth. Mr. Alfred Marshall has given the definition of welfare. Okay, then Mr. Robbins has given us the definition on scarcity. Then Mr. Paul has given us the definition on growth. So these are the four important definitions that has been given by these economists. So do remember their name with the definition also. So study of wealth by Mr. Adam Smith. Now macroeconomics deals with, so that there are two branches of economics, micro and macro. Microeconomics means a study of individual unit, individual level when you study something. That is microeconomics. Macroeconomics means when you study the economy as a whole. The economy as a whole is known as what? Your macroeconomics. So gross domestic product, unemployment, price indices, all of the above. So it's very obvious all of the above will be the right answer. All will be studied under the macroeconomics. Okay. Then next. So right answer will be D. When the prices of commodities, goods and services start declining consistently, the phenomenon is known as, like the prices of goods and services are keep declining, they keep falling. What kind of situation is it? Discount fill, deflation, negative growth, market capitalization. So capitalism, first of all, when the prices are continuously increasing, this situation is inflation. The just opposite of inflation is prices are continuously decreasing. That situation is known as deflation. So inflation and deflation both are the opposite of each other. So right answer will be B, deflation. Okay, now next. Laissez-faire economy is what? So first of all, it is saying the extreme case of market economy, the extreme case of command economy, the extreme case of mixed economy, or none of the above. What is laissez-faire economy is? Extreme case of market, extreme case of command, extreme case of mixed economy. So it's very obvious, laissez-faire economy is the extreme case of market economy. Laissez-faire means you have a freedom. Laissez-faire means freedom. Liberalization means freedom. Laissez-faire means freedom. So the private industrialists have freedom. They can decide by themselves that what to produce, how to produce, and for whom to produce. So right answer will be A. Next. Demand schedule is the dash. The relationship between demand and quantity bought, the relationship between price and quantity bought, the relationship between income and demand, and none of the above. First of all, it is related to law of demand. So the law of demand says simply that the price and quantity demanded, they have inverse relation. Whenever the price increases, the quantity demand decreases. This is the law of demand. Okay. And if I'm talking about law of demand, when you represent this relation between price and quantity demanded on a table, you represent that in a tabular form, then this relationship between price and quantity demanded will be known as demand schedule. It will be known as demand schedule. And when you represent the same relationship between price and quantity demanded on a graph, that will be known as a demand curve. Okay. And do remember this relation, price and quantity demanded, they are inversely proportional. So right answer will be your B option. Next. Money supply refers to what? First is saying the amount of money in the banks. Second, the amount of money with the people. Third, the amount of money in circulation in an economy. Fourth, none of the above. So money supply is simply kind of your liquidity. Money supply means whatever cash is there in the market. Money supply means cash available. So money supply refers to what? The amount of money with the people. No. Not with the people, but with the circulation. The amount of money in the circulation in an economy. Whatever money is in the economy, with us, with banks, with government, with corporates, everything. In circulation, whatever the money is, that will be known as money supply. It's a liquidity. So right answer will be C. Now, narrow money consists of. So we know M1, M2, M3 and M4 is there. These are the measures of money. Like RBI needs to identify how much cash is there in the market, how much money supply is there in the market, and to analyze that and to get the data of that, RBI has introduced the measures of money M1, M2, M3, M4. Okay, this is the measures of money. Now, so first we have these options. First is saying currency with public demand deposit, other deposit with RBI, currency with public time deposit, other deposit, current time deposit, demand deposit, other deposit with RBI, currency with public demand deposit. So, and narrow money is actually a M1. And what is M1? CU plus DD plus deposit with RBI. Deposit with RBI. CU means currency unit. That means the cash with the public, the coins and notes with public, with us. Second, DD means demand deposit, CASA, and other deposit with RBI. This is M1. So you can say simply the option number A is correct. That's the M1, that's the narrow money. Option number A. Good morning everyone, welcome to the official YouTube channel of Officer Adda 24/7. So first of all, let me know how are you all and how your preparation is going on. So as we know, we have very less day remaining for your JAIIB October paper. The first paper of Indian economy, Indian financial system will be on 8th of October. So we have very less time and we have to utilize this time very precisely so that nothing is there which we will not be able to cover. So we have to cover the conceptual understanding, the topic wise practice, the full length mock test, the revision, everything we have to cover. And how we will be able to cover that? We will be able to cover that particular part of the syllabus by continuing our preparation. So do not take a gap just because you will think like at the time of exam I will take the leave and continue the session, continue the studying. Don't do that. Be continuing your regular preparation. Okay, so let's start the session. A very welcome to the channel. I am your mentor Amanjot Kaur for Indian economy, Indian financial system, as well as for principles and practices of banking. So in this particular session, what we are going to do, as you know, 50 days, 50 classes we have started every day. Monday to Friday, we are discussing a particular chapter of your subject in which explanation with MCQ we are covering the understanding of the chapter. So already module A and B we have completed. It means out of 45 units, the module A covers 11 units and module B covers up to 19 units. So that we have covered already. Now we are already on the module C, and module C 21st chapter or 21st unit, that is your Indian banking industry, that we are going to cover today. So Indian banking industry structure is what? Simply we have to understand the evolution of Indian banking in the country and the types of bank, everything we have to cover. So you can see module C we are discussing here, and if we talk about any particular bank or any particular, so in every type of bank we have discussed here that a particular definition, a particular category of bank has been defined by RBI. So first, before coming up to the questions, we will be starting with the understanding of the topic. So when we talk about banking structure simply talks about the types of bank, the evolution of the bank, and everything you have to cover. So first of all, in the 1770 year, in the year 1770, we have seen that the establishment of Bank of Hindustan was done, and this was the first bank which was established in our country in 1770, and the headquarters of the bank was in Calcutta. Now this Bank of Hindustan is the only bank, or we can say the first bank, which started the formal financial system in our country. Now what is formal financial system? We have discussed that already in the 20th unit. The system where the regulators are there, the guidelines are there, the rules and regulations are there, that system is known as formal financial system. So the formal financial system started in India from when? From 1770. Okay. After that, RBI, Reserve Bank of country, the central bank of our country, was established on 1st of April 1935. That's the first time we have established the central bank of our country in the year 1935, 1st of April. So when RBI was established, it used to be the private shareholders bank. It was what? It was the private shareholders bank. It means to establish Reserve Bank of India, to establish the central bank, we needed a particular capital, and that was not available with the government. The 5 crore initial capital was not available with the government, so that have been taken from the public as a shareholding, and that's why RBI used to be the private shareholder bank. But now the ownership of RBI has been changed. Now RBI is the government's bank, and in the year 1949, 1st of January, the nationalization of RBI was done. the nationalization of RBI was done. Or since then, RBI is the Government of India's bank, because Government of India have purchased 100% shares of your Reserve Bank of the country. Clear? Apart from that, if I talk about the nationalization of commercial bank, the first nationalization of commercial bank happened in 1969. Okay, in which year? In 1969, the first nationalization of commercial bank have been seen, and there was 14 commercial banks that were nationalized in the year 1969. How many commercial banks were there? 14 commercial banks were nationalized. Now, why only 14? The first Bank of India was Bank of Hindustan, which was established in the year 1770. Since then, till 1969, we only had 14 banks. No, we had unlimited banks at that time also. But why only 14 banks? Because the government have given the criteria here. Only those banks will be nationalized who have what? 50 crore public deposit. है ना? Who have 50 crore public deposit, those banks will be known as your commercial banks. है ना? Only those 14 banks were nationalized in the year 1969. Then in 1980, the second nationalization happened, and in the second nationalization, 6 more commercial banks were nationalized. Now, why only 6 more commercial banks? Because the criteria government have given, that is 200 crore public deposit. So 200 crore public deposit was the criteria that have been seen here in the 1980. Okay, so those type of bank in India was only 6. That's why the 20 banks has been nationalized till now. That is 14 in 1969 and 6 in the 1980. But if I talk about right now, we have only 11 nationalized bank. We have not more than that nationalized bank, because the other nationalized bank have been merged with the another banks. Okay, that's what we're talking about in the nationalized bank. And if I talk about the banks in India, so first of all, we have the central bank of our country, and the central bank of our country is RBI. Who is the central bank? The central bank of country is Reserve Bank of India. And RBI has divided the banks in India into 2 categories. That is first scheduled bank. Those banks who are listed in the second schedule of RBI Act 1934, these banks are scheduled bank. And the second category is non-scheduled bank. Okay. Now the scheduled bank is further divided into 3 categories, that is commercial banks, non-commercial banks, and cooperative banks. So these 3 categories has been seen. Now the commercial banks further divided into 3 categories, that we have public sector bank, private sector bank, and the foreign bank. Okay, now the public sector further divided into 2 categories. First is State Bank of India, and the second one is nationalized banks. Okay, now the cooperative banks are also divided into 3 categories, and the 3 categories are primary credit society. The 3 categories are primary credit society, district central cooperative bank, and state cooperative bank. So these are the 3 cooperative bank: primary credit society, district central cooperative bank, and the state cooperative bank. Now the local area banks are the only scheduled commercial bank, non-scheduled banks in the country. Only the local area banks are the non-scheduled banks in our country. LAB means local area banks. Apart from these banks, we have another category of banks also, that is regional rural banks, RRBs. We have small finance banks. We have payment banks. These are also the type of commercial bank, but they have been established for a specific purpose. That's why we define them individually, because these are public-private foreign banks on the basis of the ownership. These are the types of commercial bank, and these are on the basis of the purpose they have been established. Like RRBs was established to uplift the rural economy. Now the small finance bank was established for what purpose? Simply to do the financial inclusion. Same reason was there for the payment banks also. Okay, so this is the all types of banks which are present in India. This is the banking structure of our country. Okay, now I hope everything, or I can maximum thing I have covered here in form of the theory, a kind of introduction of the chapter. Now let's move forward and talk about the questions, and we will discuss the rest of the chapter in form of MCQ. Okay, so first question is, the NABFID was set up as a corporate body with an authorized share capital of dash. So if I talk about the NABFID, NABFID is a development financial institution. What is a NABFID? NABFID is a development financial institution. We have NABARD, we have SIDBI, we have NHB, we have EXIM, we have IFCI, and then NABFID. So these are the development financial institution, and they work for a particular, they work for what? They work for a particular sector only. Like you can see, NABARD works for agriculture, rural development, SIDBI works for small industries, NHB works for housing sector, EXIM works for export and import, then IFCI works for industries, big industries, and NABFID works for infrastructure development. So development financial institutions are those institutions which develop the particular sector of the country. Now the first development financial institution was IFCI, and the latest development financial institution is your NABFID. So NABFID was established in the year 2021. So what was the authorized share capital that has been seen when we have established the NABFID? And also the same question I have put here was the question in the May 2023 paper also. So which of the following will be right option? 1 lakh crore, 5 lakh crore, 1.5 or 1.85. So right answer is 1 lakh crore. The 1 lakh crore was the authorized share capital of NABFID. It was established in the year 2021. Okay, do remember that this is a very important part. Google Pay is a dash. So which of the following is a Google Pay? So Google Pay used to be a what we can call it, it was a tech company that has been started providing the financial services by providing payment platforms to the customers. So it's a TechFin company, that is the Google Pay. That's a type of a TechFin company, that is Google Pay, a very famous application or very famous payment platform we use. Now, in terms of which section of Banking Regulation Act is the business of banking defined? In which section the banking or business defined? And the sections we have in front of you, 5, 8, 10 or 6. And the Banking Regulation Act was introduced in the year 1949. Now, what is actually the business of banking? Do you let me know which of the following option is correct, and I will let you know what is the business of banking. Business of banking is accepting deposit from public. Accepting deposit from public for the purpose of lending or investment. For the purpose of lending and investment, you are accepting deposit from the public. Then the last one we have what? The last one we have, it will be repayable. It will be repayable on the demand. That is known as your business of banking. So first is accepting deposit from public for the purpose of lending or investment, and that will be repayable on the demand of the customer. Now these are the business of banking. But apart from that, various forms of business is provided by banks. Right? Banks are not only providing these services, they are providing more than these services also. So the various forms of business that the bank performs is defined under the section 6 of the same Act, Banking Regulation Act. So apart from this business of banking, what other forms of business bank perform? Like providing demat account, insurance policy, mutual fund, etc. So these are the various types of business that banks provide, and this is defined under the section 6. Now this definition of business of banking is defined under section 5B of Banking Regulation Act 1949. Okay, so right answer will be A option. The section 5B talks about the business of banking. Clear? So right answer is A. Okay, it is written B here. It's not B. The right answer is actually A. Okay, right answer is A, not B. In section 5B it is defined. Next. What is the maximum balance that a payment bank can maintain in each account? So payment bank is what I will let you know. You let me know with what is the maximum deposit that can payment bank accept from the individual customer. So payment bank was introduced by RBI as a differentiated bank in the year 2014. In the year 2014, RBI said it is introducing a differentiated bank, and that differentiated bank got licensed in 2015. That was payment bank and a small finance bank, right? Now payment bank and a small finance bank was introduced for the financial inclusion purpose. Out of these two, payment bank was introduced on the recommendation of the Nachiket More committee. They can accept deposit from the public, but they cannot provide loan to the customer. So if we talk about here, the maximum balance that a payment bank can maintain in each account, when the bank was introduced in 2015, it was rupees 1 lakh, but now it is what? It is rupees 2 lakhs. It's what? It is rupees 2 lakh that we will see in the payment bank accepted by the bank on from per customer. Okay, 1 second. This is B. This is B. Okay, 2 lakh per customer can be accepted by payment bank now. Earlier it used to be 1 lakh, but now it is 2 lakhs. The right answer will be B option. Next question, which of the following are the feature of payment bank? So which of the following are the features of payment bank, you have to tell, and you have these 4 features, out of which you have to decide which of the following is the feature of a payment bank. So first we have, they are differentiated banks and not universal bank. Okay, this is, I have just told you that payment banks are differentiated bank, that I have told you, so this is correct. But what about universal bank? They are not universal bank. Yeah? Actually universal banks are those banks which provide all the services under a roof. When you go to the bank, deposit, withdrawal, lending, check clearance, demand draft, locker facility, safe custody, demat account, mutual fund, insurance, credit card, debit card, international credit card, debit card, everything is available under a single roof. That is the universal banking. But the payment bank cannot work as a universal banking, because payment bank cannot accept deposit from, payment bank cannot give loan to the public. So that's why they are not universal bank. So this is also true. The first statement is a feature. Okay, second, these operate on a smaller scale. It's very obvious. The payment banks are the example of narrow banking. Narrow banking means when the bank places its fund only in risk-free assets. That's what the payment bank can also do. So this is also true. It needs to have minimum paid up capital of 100 crore. This is also true. To start a payment bank, you need a 100 crore initial paid up capital. The minimum initial contribution of the promoter of the payment bank to the paid up equity capital is required to be at least 40% for the first 5 years from you have commenced your business. So this is also true. The promoter contribution in the initial 5 years will be 40% only. It means all are the features. It means all are the features of the payment bank. Okay, all are correct. Right answer will be D option. So right answer is what? D option. Clear? Next we have here, which of the following are not product of NPCI? Which of the following are not the products of NPCI? Now what is NPCI? I will let you know. NPCI is National Payment Corporation of India. That's a umbrella organization for our country, because it maintains all the retail payment system in our country. It maintains all the retail payment system in our country. That's the NPCI. So NPCI is an umbrella organization, and RBI have thought, and RBI have said that, like, NPCI first of all established in 2008 by RBI Indian Banks Association, and before some time RBI said that NPCI have the monopoly in the market, because all the retail payments are managed by NPCI. So it kind of actually have a what? It kind of actually have a monopoly in the market, and to remove that monopoly and to stop that monopoly from the market, RBI has introduced the new umbrella entity. They have not been established yet, but the licensing or the application, I can say, the application RBI started getting from the new umbrella entity. So these new umbrella entity will be the competition of the NPCI, so that NPCI will not create the monopoly in the country. That's the RBI's idea. Now, which of the following is not a product of NPCI? RUPE is a product, IMPS is a product, NACH is a product, NFS is a product, but not NEFT, RTGS. They are managed by RBI, and they both have become 24/7 also. So all are the product of NPCI except fifth. So this is not a product of NPCI, all the others are. So right answer will be D option. Okay, next. In terms of which section of Banking Regulation Act is the business of banking defined? So this we have done already. Now this is a repeated question. Really sorry. Now, a transaction carried out at an ATM of the card issuing bank is called an dash transaction. See, there are two types of transaction. First is on us. Second is of us. On us transaction means, let's say you have a account in SBI and you have a ATM of SBI. So when you have account of SBI and you are using the ATM of SBI only enough to withdraw the money, that is known as on us transaction. That's a on us transaction. But if you have a account of SBI but you are using Punjab National Bank's ATM to withdraw the money, that is known as off us transaction. So on us and off us transaction are there. On us means you are taking the money and withdrawing the money from the same bank accounts, from the same bank's ATM, and in the off us you are taking withdrawal from the different bank's ATM. So which of the following will be correct? The transaction carried out at an ATM of the card issuing bank only, the card issued by SBI and you are using the SBI ATM. That's what? That's an on us transaction. Okay, so right answer is A. Right answer is what? A. Next question. Match the following. So we have institute here, we have the establishment of the institute, and we have to match them. So first let's see, out of these five, which bank establishment you know? So I know the establishment of Imperial Bank of India. Imperial Bank of India was established in the year 1921, that is 5th. Because after the merger of all the Presidency Bank, we have created Imperial Bank of India. So I remember the year. Now, do I know the Punjab National Bank? Yes, I do. Punjab National Bank was established in 1894. Okay, it stayed in the Pakistan also after the independence for 1 year. Next, the first Presidency Bank, I even know this. The first Presidency Bank was the Bank of Calcutta, but its name was changed in the 1809. That was Bank of Bengal. So it was actually established in 1806, Bank of Calcutta. So this is third. Now, I do not know the establishment of Indian Bank. I really do not know the establishment of Indian Bank, but I know the establishment of Bank of Madras. It was established in 1843. That's the fourth. So the one more Presidency Bank was there. The first Presidency was Bank of Bengal. The second was Bank of Bombay. It was established in 1840. And the third was Bank of Madras, established in 1843. It means then the Indian Bank was the 1907. So I really didn't know the establishment of Indian Bank. Now do remember, Indian Bank was established in 1907. So the first is E, the second is D, the third is C, the fourth is B, and the fifth one is A. So first is E. No. First is E, this is true. Second is D, this is true. Third is C, this is true. Fourth is B, this is true. And fifth is A, this is also true. It means the right answer will be D option. The right answer is D option. So do make sure in the match the following, find out the option which you actually know. And what are the remaining, that will automatically be fit in the answer. So right answer is D option about the match the following. Okay, now. Next is, what is the minimum capital requirement for setting up of a small finance bank? If you want to set up a small finance bank, what initial capital you required? So I have told you 100 crore is required for the payment banks, right? Now if I talk about 500 crore, this is required for what? This is required for commercial banks or universal bank. Okay, and this 200 crore is required for a small finance bank. So when the small finance bank was introduced now with the payment bank, it used to have the initial capital 100 crore like the payment bank have right now. But its initial capital has been increased by RBI. Now it is 200 crore. So payment bank 100 crore, small finance bank 200 crore, commercial bank or universal bank 500 crore. So do remember all these three. Okay, so right answer will be your B option. When we started this particular series, there were 50 days left. Now the days are continuously decreasing. So it means we have to be more cautious about our preparation. Like we have a very less time period to prepare, and we have 4 subjects, all each and every subject have 4 modules, so we have to be very much prepared for all of these. So now let's start the session. But before starting the session, I'm your mentor Amanjot Kaur for Indian Economy, Indian Financial System and PPP. And these sessions are going on Monday to Friday in morning 7 AM for PPP and 7:30 AM for Indian Economy, Indian Financial System. So do join these sessions only on offices that are 24/7. Now let's start the session. And as you know, in each and every session, I come up with a particular topic of yours, and in that topic, I will discuss the certain number of questions with the explanation of the topic. So what topic we are going to discuss today? We are going to discuss the chapter number 14 today, and simply we know that Indian Economy, Indian Financial System have the four modules. Out of that, first module covers only 11 units. Total we have a 45 units. Out of that, the first unit only covers your 11 units that we have completed. 12th and 13th unit we have already completed, and today we are going to discuss the 14th unit, that is money supply inflation. So before coming up to the questions, practicing questions, let's start and understand the topic, and then we will move forward to the questions. So first of all, what is money supply? So for money supply, RBI is the central bank of our country, and RBI need a certain, what we can call it, RBI need a, okay. So RBI is the central bank of our economy, RBI is the central bank of our country, and RBI needs to measure the liquidity in the market. RBI needs what? To measure the liquidity in the market. So RBI have to measure the money supply. RBI have to measure the money supply in the economy. And when RBI measure this money supply in the economy, this will be done by RBI with M1, M2, M3, M4 and M0. Out of that, M1 is known as narrow money, M3 is known as broad money. They are very famous, they are broad money and narrow money, and they are very famous. In contextual, maximum number of questions will be asked from these two. Now it's very obvious, like RBI is the central bank of our country. It's the responsibility of the RBI to manage the liquidity in the market. Liquidity means the cash flow in the market. And how RBI will be managing this cash flow? With the help of monetary policy. So we know that RBI makes monetary policy. RBI makes what? RBI makes the monetary policy. So this is the responsibility of RBI to manage the money supply. Let's say in the economy, the money supply is increasing. If the money supply increases, the demand of goods and services by the consumer increase. If we have more money, we will purchase more goods and services. If the demand increases, the supply will decrease, because the demand and supply will always have an inverse relationship. They always have an inverse relationship. So if the demand is increasing, supply will definitely be decreased. Okay. Now after that, the prices will start increasing and the money value of goods and services will be decreasing. And that creates inflation in the country. That creates what? That creates inflation in the country. Okay. Now, if money supply is reducing, then people will demand less goods and services, and then the supply will be more in comparison to demand, and then the prices will reduce, money value will increase, and this will create deflation in the economy. So you can see, if the money supply is more than required, then it creates inflation in the country. If money supply is less than which is required, it will create deflation in the country. So to make economy capable of being stable, we have to stable the money supply. And to stable the money supply, RBI makes monetary policy. RBI makes monetary policy, and the objective of monetary policy is what? To have a price stability. To maintain price stability is one of the objective of monetary policy in our country. That's what RBI is doing. But to maintain the price stability in the country, RBI have to know like how much money is there in the economy. And how RBI will know how much money is there in the economy? With the help of these measures of money. So with the help of M1, M2, M3, M4, M0, RBI will know what amount of money is available in the economy. Accordingly, RBI will make the monetary policy to maintain the price stability in the country. So they all are related to each other. Now, what is inflation? This is what we have discussed about about the condition, measures of money, and what is the reason behind which RBI have to maintain this measures of money, right? Now let's talk about a little bit about inflation. So what actually the inflation is? Inflation, if I am talking about, let's take an equation here. like what is inflation? This is the question for all of you. What is inflation? Okay. Now I have first option, increase in money supply is inflation. I have second option, increase in demand is inflation. I have third option, increase in prices is inflation. I have fourth option, that is reduce in the money value is inflation. And I have fifth option, that is all of the above. So which of the following option you will give that this is the right answer for this question? What is inflation question is asking, and these are the option in front of you. So let me know which of the following according to you is correct about the inflation. So can I say that inflation is simply rise in the money value of goods and services? Can I say inflation is the increase in the money supply? Inflation is the increase in the demand? Can we say that? Let's understand this. So if I talk about our country, I have never heard this statement from any person that Mr. Ambani have more income now, that's why there is inflation in the country. I never heard someone saying that the demand of crude oil from the India is increased, that's why we have an inflation. I always heard people talking about like the petrol we used to purchase at 70 rupees per liter, now the petrol is 140 rupees per liter. It means the price has been just doubled. So I always heard people talk about in context of the price, and that's what the inflation is. So whenever the prices of goods and services are rising, that will create your inflation. So the right answer is prices increase. Increase in the prices of goods and services is what? Is what it's an inflation. Okay. Now, what happened? What happened if we're talking about inflation here? So what happens here? First of all, let's see. What conditions are there? So economic conditions will be like whenever we talk about the increase in the prices of goods and services, the first of all money supply will increase. So whenever the money supply increases, what happens? Whenever the money supply increases, the demand of consumer will increase. Whenever the demand of consumer increases, the supply will decrease because the demand and supply have an inverse relation, negative relation or opposite relation. So demand increases, supply will decrease, so prices will start increasing because people are asking for more goods and you do not have a goods. So prices will what? Increase. In that situation, the purchasing power of money will be decreased. Purchasing power of money, or you can call it a money value also. The money value will decrease. Why money value is decreasing? The reason behind is because the prices are increasing. Let's say I used to have 200 rupees. I used to purchase 2 products in 200 rupees. This 2 pen I used to purchase in 200 rupees. Now what happened? The prices increase. Now this 1 pen will be available in the market for 200 rupees. So I used to purchase 2 commodity. Now I am purchasing 1. It means the 200 rupee note which I have now, it has a less capacity to purchase goods and services comparatively that I used to have. It means the purchasing value of 200 rupee note has been decreased. The reason behind, because the prices increases. So whenever there is an inflation, the money value of the currency will definitely be decreased. Okay, so all these terms are related to inflation, but they are not inflation. Inflation means rise in the prices of goods and services. Why prices are rising? Because there is a more demand. Why there is more demand? Because people have more money supply. And after increasing prices, what impact will be seen? The money value will be decreased. So this is what we are talking about inflation. Okay, so I hope till now everything is clear to all of you. Now we will be starting practicing the question, and in the end of the session I will be asking you all that how many answers you have given correct here. Okay, so do count how many answers you are giving correct. So first question here is that which of the following statement true about inflation? The statement which is true about inflation, and we have these 4 options in front of you. That is, first thing, a rise in the general level of prices leads to fall in the purchasing power. Both A and B, none of the above. So what do you think, which of the following is correct? First is prices are rising, second is purchasing power leads to decrease, third is both A and B, fourth is none of the above. What do you think, which of the following is correct? So right answer will be both A and B, because it's very obvious the general level of prices will increase due to the inflation. It leads to fall in purchasing power. Is it true? Yes, it's true. Why it's true? Inflation leads to a decrease in the purchasing power of people as well as money. Because let's say money supply increased, the demand increased, but the supply decrease, because of which the prices are keep rising. This is what inflation is. When the prices are rising, it means the cost of living will also rise. Cost of living means simply means the money you have to spend to survive. That's the cost of living. It will increase. And when the cost of living increases, you somehow have to decrease your spending, and that will promote the lead to fall in the purchasing power. And similarly, the money value reduces because the money will be able to purchase less goods and services comparatively earlier. So the purchasing power of people and the purchasing power of money both will decrease. So right answer will be C option, sorry. Okay, right answer is C. Second question we are talking about here, the demand deposit of banks are included in. So if we talk about bank have a certain assets. Every business have assets and every business have liabilities, right? So if I talk about the asset of a bank, the asset of a bank is the loans and advances which bank provide to its customers. Okay, and what is liability? Liability means simply public deposit. Liability means public deposit, that's the liability. Okay, and these deposit are of two types. That is demand deposit, the type of deposit which will be dependent on the customer demand, and the second one is the time and term deposit. So the demand deposit covers CASA, current account, savings account. Time deposit covers RAFA, recurring account and fixed account. So demand deposits are those deposits which can be deposited as per the demand of the customer, withdrawal as per the demand of the customer. Time deposit or term deposit are, on the other hand, the types of deposit which will be there for a particular period of time. Okay, so now this is what the deposit we are talking about, and this is what the demand deposit is. Demand deposit means CASA, and the question is asking which of the following includes the demand deposit. So we have options M1, M2, M3. And to answer such kind of question, you should know what is M1, what is M2 and what is M3. Okay, so here let's understand this. If I am talking about M1, M1 is equals to currency unit plus demand deposit plus deposit with RBI. This is what your M1 is. M2 we have M1 plus post office savings. PO savings means post office savings. M3 we have M1 plus time deposit. I will explain all these, don't worry about it. And the M4 we have M3 plus post office savings, but excluding national savings certificate, right? So what is M1? M1 is saying CU plus GD plus deposit with RBI. Currency unit, CU means currency unit means whatever notes and coins public have. DD means demand deposit, whatever CASA public bank accounts have. Then we have deposit with RBI, where whatever reserves or deposit RBI maintains. This is the M1. M2 means M1 will be there, CU plus DD plus deposit with RBI will be there, plus you will have a post office savings. In the post office, you have FD, you have RD, you have MIS, etc. All these will be covered. Then M3 will be M1 plus term deposit. Term deposit means your RAFA. M4 will be M3 plus your post office saving, but the national saving certificate amount you have to be excluded. So here the question was asking which of the following includes the demand deposit. So M1 includes demand deposit, M2 includes demand deposit, M3 includes demand deposit, and M4 includes demand deposit. Because in M2 we have M1 have demand deposit, in M2 we have M1, in M3 we have M1, in M4 we have M3. So all these measures of money will include the demand deposits of the bank. It means the right answer here will be all. M1, M2, M3 all will be having the demand deposit. So the right answer will be your D option. Okay. Next question. Under money supply concept, the term broad money include which of the following? So broad money, I have told you which of the following is broad money. M3 is a broad money, and I have told you the formula of broad money. So let me know which of the following will be the right. Which of the following statement will be right? Let me know that. A, B, C or D? Okay, so if I talk about this particular question, the question is talking about what is M3, and you can see M3 will include the term deposit. The first one have deposit and public deposit. It do not include term deposit. Then we have currency with public demand deposit, other deposit with RBI. It also do not have term deposit. Fourth one is saying currency with public plus bank deposit plus post office deposit, but it do not include time deposit. Here is the time deposit with bank, the demand deposit of a bank, and the currency with public. So right answer will be your C option. Okay, right answer will be C option, which will cover the time deposit. It means RAFA will be covered under the M3, and broad money means M3 only. Okay, next, the most important money supply indicator monitored by RBI is dash. So we have measures of money M1, M2, M3, M4. So out of these four, which of the following is the important money supply indicator for the Reserve Bank of India that RBI calculates? Let me know which of the following is true. A, B, C or D. So I think it is very easy to answer. RBI measures this money supply because of the reason, Hana, because of the reason RBI wants to know how much money is there in the economy. Hana, RBI wants to know how much money is in the economy. That's why RBI is calculating this. Right. And RBI will want to know how much money supply in the economy, and the money supply in the economy that will be defining every liquidity to the RBI. That's a broad money. So right answer is C, because it will cover deposit with, it will cover currency unit, the money with public, it will cover demand deposit, the money with commercial banks and all with the in the CASA, then the term deposit, then the deposit with RBI. Every type of money which is available in the economy will be calculated by the M3, and that's why it is the important money supply indicator that RBI calculates. So right answer will be your C. Next question. Demand deposit with a bank include all liabilities which are payable on demand, and they include dash. The demand deposit is what? With a bank include all the liabilities. It do what? It include all the liabilities which are payable on the demand. So they will include what? Options are these. Out of that, let me know which will be included here. So demand deposit with a bank include all the types of liability which are payable on demand. It will include. So demand deposit itself represents that the deposit you have given to the money that will be run on as per your demand. If you want to withdraw it, you will withdraw it. If you want to maintain it, you can maintain it. There is no such kind of restriction. Okay. Now, which of the following is right? The current deposit, demand deposit portion of savings account. This is correct. Margins held against letter of credit and guarantee will be covered. The balance in overdue fixed deposit, cash certificate, cumulative recurring deposits, all these will be covered under the demand deposit with the bank liability we are talking about. So all answer will be your D option. 1, 2, 3, all the statement were true. Next. Which of the following measures of controlling inflation? One second. Which of the following controlling measures of inflation can be taken by Reserve Bank of India and not by government? So we know inflation is a rise in the prices of goods and services, and that can harm the economy. If the prices are increasing above a certain level, it will create a loss for the economy. So inflation is good for the economy, but a limited inflation is good for the economy. So that's why if inflation is rising, this is the responsibility of the RBI to control that. So that's what we're talking about. RBI have a certain measure that is known as a monetary measure which controls the inflation. Government of India takes the fiscal measures to control the inflation. Similarly, we have foreign trade measures. It helps in the controlling the inflation. Apart from that, we have other measures in which production will be controlled so that inflation will be controlled. So out of these, you have to tell which of the following the controlling method used by RBI. Which of the following controlling method should be used by RBI? Okay. So the right answer here will be, first is saying introduction of progressive, one second. Introduction of progressive tax system. This is in the hands of the government of India, not RBI. Control over public expenditure, again done by the government. Then profits of the public sector is in the hands of the government. So these three measures will be taken by the government of India in the fiscal policy, but the rationing of credit will be done by Reserve Bank of India, in which RBI tells in which particular sector how much loan you can provide or how much loan you cannot provide. What down payment you have to take, what down payment you are allowed to take in case of what type of loan, also how many installments you can make in a case of loan. All this will be done by RBI. That is known as your rationing of credit. So right answer will be C option. This is the measure that RBI takes. Which are the following below indexes associated with the given statement? Like, it is an index that tracks the change in the retail prices of essential goods and services consumed by the households. So whatever goods and services we are consuming, that prices will be calculated on the retail level. And which of the following index calculates that? This is the question. Is it a CPI, is it a WPI, is it a PPI, is it a CPI for agriculture? So it can't be WPI because it measures the inflation in the wholesale market. It can't be producer price index because it takes the inflation at the production stage. Okay, so we have two options, consumer price index and here the CPI also. So this is what we know, that WPI measures the inflation at the wholesale level and CPI measures the inflation at the retail level, that we know, right? So in this situation, A and D can be right. Out of these two can be right. Now we are talking about essential goods and services consumed by the household. Here you are talking about CPI for agriculture labor. So right answer will be what? It will be B. Sorry, not B, this A, consumer price index. Okay, so CPI measures the inflation at the retail level and CPI also maintain the record of what? It also maintains the record related to your retail level plus the cost of living of the public. So right answer is A. Next, if the public finds ways of making the same amount of money perform a larger amount of transaction than before, then dash. So what we are talking about, if the public finds ways of making the same amount of money perform a larger amount of transaction. Let's say I used to purchase 200, I used to give 200 rupees and used to purchase 2 pen. Now I am giving 200 rupee, but I am purchasing 4 pen. It means the same amount of money which I have, it performing the larger amount of transaction. Okay, it is performing the larger amount of transaction. This is what the question is asking about. This situation be known as what? And these are the options in front of which of the following will be right? The demand for money must have risen. Velocity of money have risen. Incomes and prices must have risen. The supply of money must have risen. So which of the following is right? Which of the following is right? So it's very obvious the demand for money have not risen. The income and prices must have not risen. The supply of money must not have risen. The velocity of money have been risen. It means that the purchasing power of money increased. That's why in the 200 rupee you are able to purchase 4 products. So when the money supply, money value of the currency increases, that's the velocity must have risen of the money. So right answer will be your B option. Right is B option. Okay, because you are paying the same amount of money, but it is performing a greater transaction. Now, narrow money consists of, narrow money means M1. So, these are the options in front of you. Out of this, M1 includes CU plus GD plus deposit with RBI, and you can see currency with public is CU plus the demand deposit plus the deposit with RBI. So, this is your right answer. M1 will be your A option. Okay. Now, money supply refers to. So, a lot of time we talk about the money supply. We have just talked about these M1, M2, M3 are the measures of money supply. So, what money supply actually means? It's a liquidity that is available in the economy. But how to define this? First option is saying The amount of money in banks. Second is saying the amount of money with the public, the amount of money in circulation in an economy. So which of the following will be right answer? Obviously C. Whatever money will be available in the economy, whatever liquidity will be available in the economy, that is known as your money supply. So right answer is C option.